All right, guys. Market is really good day yesterday for me, man. Honestly, we ended up scaling out of most of our Disney trade. Square is up, Tesla is up, PayPal is up, gold is up today too. So could be a lot worse, man. Honestly, we scaled out of most of our Disney trade. I'll take it. Today, SPY is gapping up a little bit. We're watching Tesla. Hey, what's up? All we do is twin. Yeah, it's 11 Eastern time. Hey, what's up, Joseph? One love. All we do is twin. Shadow, Tim, Dan, chill. What's up, guys? Good morning. Yeah, we're starting a little bit late today. I mean, we don't really have any earnings or any economic releases coming out today. Um, so I figure we're gonna start a little bit later on because we gotta stay streaming a little bit later on because of the Jerome Powell speech. Um, so you know. Oh, we do have some earnings today, man. We had Foot Locker and John Deere earnings, but it's all good. Like these are small. Next week we got some better earnings. Like Wednesday of next week, we have Nvidia, EXPR, Snowflake, American Eagle, Red Robin. Thursday we got Best Buy, Dollar Tree, Burlington, Build a Bear, TD Bank, Royal Bank of Canada, Weibo. Let's look at Tuesday. Tuesday we have Dick's Sporting Goods, Lowe's, AutoZone, Williams Sonoma, City Trends, Intuit, Toll Brothers, Urban Outfitters. But pretty slow. Today, the big thing is Jerome Powell interviewing Bernanke, who was the old Fed chairman. What's up, Gro? Yeah, we slept in. I mean, listen, uh, we're gonna have to keep the stream running a little bit longer today relative to normal because of the Jerome Powell interview. And so I figured I would just start it about an hour late, and then I figured I would just start it a little bit late. And yeah, yeah, a lot of stuff ripped up big yesterday, man. And again, it's kind of one of those things where it's like, again, every time I buy Disney, I get some skeptics, and I understand the skeptics, but Disney ripped all the way up to 94 plus yesterday, 94.20s, and I took most of the profit off of that trade. So another green trade on Disney. Um, I'll take it. Uh, yeah. So yeah, we added to Disney and took it off. We're also we're holding to some swing trades right now because we can. 92% JP interview pumps. Yeah, they could pump the market. They could not, though. I mean, he generally will try to say good things. Um, but yeah, right now we're still holding a little bit of Disney, not a lot, a little bit. You can kind of see the Disney trade right here if you guys really want to. We're still up about 118 on it. Our average is about 91.80s. Today we're down about 75 bucks or so, but we're still up really nicely on that. We're also in SQ. We're green on that. We're also in Tesla. We're green on that. We're also in PayPal. We're slightly red on PayPal. So that is what we're doing right now. So not bad. Um, what's up, Layla? Kim? Yeah, y'all do me a favor, hit the like button. We're also going to do a poll. That's a good question. Does Jerome Powell pump the market up today? Yes or no? Vote on that poll. That's an interesting conversation. Yeah, I mean, I think we've seen some positive signs for inflation over the last couple months. What time's the Fed speak today? So we got some Fed speakers. Let me get some music playing. Hold on one second. We do have some Fed speakers today. They're speaking. Let me see. So the Fed speakers are speaking today, which is the 19th. At we've got Powell speaking at 11, ECB Schnabel speaking at 10:55. We've got Williams and Bowman speaking at 8:45 and 9 a.m. So it's a big day of like Fed speeches. We got Canadian retail sales at 8:30, but nothing really big to be honest today, except for the Jerome Powell, interview speech thing. That's pretty big. Yeah, I think I like Tesla, and I'll explain why I like Tesla here. And I'm in Tesla right now, and I'll explain why. The reason I like Tesla here is because the Cybertruck is said to be coming out this year. If the Cybertruck does come out this year, I think it'll break records. I think it'll break records. I think Tesla will move up. I might be wrong here, but I'm pretty sure if the Cybertruck comes out, it's going to break records. And I'll explain why. Is because the Cybertruck is bulletproof. It floats on water. It looks like a Mars rover. It's got great towing capacity, and it's fast, right? Those 5 things make it a really cool truck. A really cool truck. It's got Elon Musk made people kind of wait on it for years now. And so I think when they finally go live with the Cybertruck, it's going to break records. It's going to do a ton of sales. And that's going to boost Tesla stock. Again, I don't know for sure. We're purely speculating here. Again, I genuinely don't know. But, again, bulletproof, fast, floats on water. You know what I mean? Great towing capacity relative to other trucks. Just amazing truck specs, really. And so I think it's going to break records. Yeah, I'll put the music up in a second. I haven't started the music yet. I'll put them up in a second. So just bear with me. We will. But yeah, what we might do on the slower days is just kind of stream late like we did today. Be wrong here, but I'm pretty sure if this. All right. All right, guys. So yeah, let me get the music playing here. Anything else you guys are looking at buying today? Well, Monday printing, quantitative easing. All right, now you should be able to hear the music. Let me know if you can't. Yeah, the question I have is like, does PayPal bounce back? Yeah, it's kind of one of those things, man. Like, again, the doom and gloom crowd. Like, again, I think people are missing out on what's going on here. Like, I really do. Like, okay, here's the thing that people have to understand, right? Is that generally the market doesn't stay down for that long. It will stay down. Like, it doesn't go up forever, of course. But like, the market is already down over the last 2-year period. So like, the people acting like we just have to crash and we're gonna crash and we're due for a crash or whatever that means, it's not necessarily true. Like, if you look at the SPY here, we've been dropping and we're down on the last few years. We're nowhere near the lifetime highs. You know what I mean? So like, we're not anywhere near the lifetime highs. We've been dropping since 2022. in 2021. You know what I mean? So like we're still pretty far off of these lifetime high levels as well. So people acting like we're just so extended on the upside that we have to come back down. It's just not accurate. Again, I think like bear markets are not going to last forever. I think eventually we're going to start to pull back up some. And I've been saying this for a year now or so, despite all the doom and gloom talk. And we've been right at this point in time. The SPY's green on the year. Since October, the market's been running up. And we also put our money where our mouth is and kind of balled up some stuff as it happened too. So I mean, again, I guess the point is like you got to understand the clicks. Like people want clicks, right? They get more clicks if they tell you the market, is something crazy is about to happen in the market. And you have to be able to recognize that. And then they're also going to be less willing to admit they're wrong because they're selling you stuff, And so that's just kind of how it goes. But yeah. Bitcoin can't hold 27,000. I don't think it really matters. I think it's just been consolidating between 25 and 30K. So I don't think 27K is like some huge level. I think it's just consolidating between 30 and 25K, and it has been since March. So when it breaks out of that range, if it breaks under 25K and holds there, that's a milestone level for sure. But we'll see. Because I mean, again, I just think you got to look at the market over the last few years. I'm not saying we don't hit a recession. What I'm saying is that the market's not that easy to predict. Okay. The Fed says we could hit a mild recession, and originally they thought we'd hit a much worse recession. Now they're saying we might hit a mild recession. It is certainly possible that they come around and say, oh, well, we're not going to hit a recession at all. That's certainly possible. And the market's been dropping for a few years now. And so we're starting to get a leg back up, but it's not like we're deeply extended, like way up here on the upside, testing highs or anything like that. Like that's just not what the market's been like. And so generally, eventually we're going to start to head back up, especially since it's been years on this downtrend. It's been years since we've been downtrending. And so that's not going to stay forever. We're not going to downtrend forever. Generally after big crashes, which I think a lot of people could consider 2022 and all that stuff to be a little mini crash here. Generally we start to rebound back up, I think. Looking at microchips way overbought and heavy extended Bollinger Bands. Yo, I got into Disney at 91. What do you think, bro? I mean, I don't know what you should do, Raphael. For me personally, I'm usually one that takes profit pretty quickly into things, bro. So like I'm generally taking profit pretty fast into stuff, dude. So like I said yesterday, I took profit at 94s, 94.20s, because I could. And I'll probably just let the rest sit. I mean, I got $100 or 100 shares left in this, so it's not like it's the biggest trade anymore. Are you serious with recession? No way. GDP now 1.9% in sale growth. GDP revision up to 3%. So wait, Oleg, you're basically saying that we're not going to hit a recession, is what you're saying? Again, the recession definition is 2 consecutive losing, like negative GDP quarters, not just down relative to before, but losing like negative GDP growth quarters. That would be defined as a recession, as well as like they've also thrown recently in their high unemployment. Eastern Standard Time. And so again, I don't know what we're gonna do. I think we could hit a recession this year. It just depends on what happens for CPI, PPI, like all the monthly metrics that drop. That's what's gonna matter the most. All right, guys. So yeah, we'll see if the market bounces back up. Disney up there. I'm just kind of sipping my coffee, enjoying life this morning. Spy moving. Simply data points don't allow recession happen by definition. Yeah, I think we're all right now. I mean, anything could happen though. I mean, GDP growth could change certainly. Like inflation numbers could change. Um, Sales numbers could change. Right now, it doesn't look like it. No, um, but uh, but anything could happen. It's not something that, like, one of the things about the market, like one of the biggest problems I see here regularly about the market is that people act like certain things need to happen or have to happen, and they never do. The market has always been unpredictable. And so nobody knows really what's going to happen here. And we can make predictions. And I think a lot of people are really stuck on their predictions because they're like selling courses and stuff like that. And I get it. But like a lot of times they're too rigid with their predictions, right? Like you guys see how I go into everything. Like I go into everything with like, hey, I have no idea what's going to happen here. I have no idea what's going to happen. I don't know if it's going to go up, down, or sideways. I don't know if the market's going to hit a recession or not. I really don't know. All we can do is speculate on it. And I think more people need to have that mentality because, again, I think you got just a lot of people selling courses that are too rigid. You know, like they tell you this is going to happen. It has to happen. And then when it doesn't, everybody's super upset with them because they acted like it was a for sure thing. And so I always try to take the path of, hey, I have no idea. All right, guys. So yeah, look at the SPY pop all the way back up to over 420s here, man. Over 420s. Where's Elon Musk at? That's like one of his favorite numbers, and the SPY has ripped up past it, man. So hey, good for it, dude. Again, I'm for it. Let's let the market bounce here. Again, I'm holding some swings. I've recently on those pullback days started to add to some positions here, like Disney, again, PayPal, SQ. And so my swing trades are going pretty nice here today. Again, Tesla, I bought some Tesla too, bought some gold. So we're gonna see if these continue in my favor here. Yeah. Octavian says I lost almost 20K because I was too stubborn to admit I was wrong. Great lesson, but hurtful. 100%, man. And again, you don't want to be rigid in trading. Like you don't want to be rigid. Like you just want to be loose, and you got to be able to admit you're wrong. I was wrong about Tesla down at $100. If anybody remembers, I was talking about how bad Tesla was at $100, and I was wildly wrong, man. Obviously now Tesla's up like 80% relative to their whatever they're up to now, like 75-80%. And so I was wildly wrong about that. But I think I have more things, and I think one thing that builds that type of confidence is being right, as well. Like I'm right about enough stuff to where when I'm wrong, I can accept it and I'm all right with it. Uh, right, but look at Disney rip. PayPal up, Tesla up a little bit, so that's nice to see. Again, we're in Disney. Part of me wants to add a little bit to Disney, but I think I'm just gonna wait. Yeah, definitely top 3. Yeah, top 3 traders ever with no ideas ever. Oh, I have ideas. I just never tell anybody. I don't ever tell anybody anything as a for sure thing. You know, I never do. I don't know what's going to happen. I don't know if markets are going to go up, down, or sideways. I think that gets people in trouble. I'd rather just tell them I don't know, and then tell them I trade ideas and stuff like that. Yeah, Foot Locker dropped some numbers here. So FL dropped. So Foot Locker dropped, and Foot Locker is down a lot. Here's FL. FL's down to 32. Yeah, we'll see B10. Hopefully so, man. Yeah, I think AI is going to change a lot of stuff. You know, I think AI is going to change a lot of stuff. Let me know the industries that you think AI will destroy. I'll give you an easy one, and I think this one's fairly obvious. I hate to say this, guys, but photography. I think most of the photography industry is going to go bye-bye because of AI. Now, not all of it. I think you're always going to need somebody to stand there and take pictures. But I think that there's 2 different parts of this that make me think the photography industry is going to go away pretty fast. The first one is phone capabilities for cameras. Not the whole photography industry. Again, I think there's going to be small segments of photography that are going to stick around and be okay. All right, look at Foot Locker dumping down here. Let's go ahead and report in the numbers. But yeah, photography, if you look at AI headshots, for instance, right? AI headshots are very, very good. Very, very good. So Foot Locker lowered guidance and had lower than expected sales is what this looks like. But a lot of photography niches like headshots, like real estate photography, headshots in general, like photo shoots, like anything that revolves around a photo shoot of some sort in editing. It might not even be the photographers themselves, but I think a big part of photography is the editing that goes behind it, as well as the I think AI is going to completely change the game for photography. I think it's going to just completely destroy a lot of that industry. And I think it's fairly obvious too. Again, if you look at AI headshots, I've shown people my headshots before, but they're pretty good, man. Like the ones I got were pretty good. Let me see if I can find them. But like the AI headshots are actually genuinely like good, like surprisingly good, like better than you would think they would be. I showed people with my broker this, and they were like, "Wow," you know. So, I don't know where I'll have to go find them somewhere. I don't know where they are, but they're good though. Yeah, here's one of them. Here's one of them. And again, I didn't go take this picture. They I sent them I didn't wear this suit. I never wore this suit. So I never wore this suit. I never took this picture. And now it's not perfect. Like there's a bunch of other ones too, but yeah, copywriters are definitely done. Copywriters are definitely done. Copywriters and a lot of I'm gonna say nonfiction writers in general are gonna go bye-bye from AI. Nonfiction specifically, like technical and nonfiction writing. It's not gonna go completely gone. Again, always understand, I'm not saying the entire niche is going to go away, the entire sector is going to go away. I'm just going to say it's going to be drastically affected by it to where you're not going to need 80% of those anymore, of nonfiction writers. And again, not right now. I'm saying like 5 to 10 years in the future, you're not going to need 80% of nonfiction writers. Now, I think fiction is always going to be creative and necessary, and I think while AI is still going to take a lot of that too, um, I still think yeah, I don't own that suit at all. Uh, yeah, those aren't even the better ones. So the better ones, I mean, I'll tell you this, that looks a lot like me, like that looks a lot like me. And so might not be perfect, but it's close. I think it'll make nonfiction writers more creative. I don't think so. I think, yeah, Powell talks at 11 a.m. Yeah. Yeah, I mean, I got some other ones too. I don't know where mine went. I have them somewhere. I don't know what I did with them, but they're somewhere, man. Um, yeah, it's just gonna make everything fake. No, but I think it's gonna be used. You gotta think of it in business terms. I think in business terms, it's gonna replace a lot of different stuff. Yeah, I think they're gonna do another 25 basis points. Yeah. Yeah, so nonfiction is technical writing. It's not made up. It's about real life things. That's what nonfiction is. Fiction is stories and uh, like not reality, like made up stories. And so again, I think Chat GPT is going to replace nonfiction. So I think it's going to replace technical writing because you don't need somebody to write technically about stuff that's already happened anymore. You can kind of just program a robot to do it. Uh, yeah, I'm in Tesla right now. I bought it. I don't know, dude. I like the story. I liked it, Chris. I thought the new Avatar was good. What I think the problem with the new Avatar is that back in the day, the technology behind the imaging in that movie was like groundbreaking and crazy good, and everybody was like, "Ooh, look at this picture! It looks so real." You watch it 10 years later, and I'm like, I don't buy this for a second, dude. Like I watch it now, and I'm just kind of like, "Hey, this is not it." Like again, I don't. It's hard to suspend disbelief when it looks so fake. And so I think what happened is that technology caught up with it, and I think that because the old one was the same way, they had to use the same old technology, and so that made it look a little bit worse in terms of like graphics. Do you think market will have a strong pullback in the near future? Seems like the market is a little overextended. I think so. I think the market's probably a little extended right now. Again, I have no idea what the market's going to do, but I can agree that the market is up a lot over the last day. I used try it on AI is what I used. The better one that I used is headshot, or let me see. It was like, let me see what it is. Here, look, I'll show you some of the other ones. There was a better one that I used that was much better. I'll find it. Yeah, so the one I other use is Studio Shot AI. So look, I'll show you guys this. You know, my hair's still a little messy because I remember I didn't do my hair when I did this. But like, they're much better than the other ones, I think. They're more realistic. They look like me a little bit more, you know. These are not my teeth either. Like, that's not my teeth, you know. But my point is, like, photography is in trouble because, like, these are solid, you know. Like, these are solid, and photography in that regard is in trouble. So yeah, again, so I think photography is going to take a hit from all this stuff too. Well, you got to have kids, CT. I don't know if you have kids, man, but my kids loved Avatar, the first one and the second one. The second one was sad though, dude. I wouldn't expect it. I wasn't ready for it. But yeah, it's Photoshop, but it's basically AI Photoshop. Like, again, I never wore this suit. Like, again, I never wore this suit. I never wore these clothes. My hair wasn't fixed at all when I took these pictures. So I didn't wear any of this stuff. So it's like an amazing Photoshop automatically. You know, is what it is. SPY still pumping up though, guys. Look at the SPY here, guys. SPY up to 420.50 right now. Higher pre-market's 420.65. So just big moves. Yeah, well, Google Bard is actually pretty solid, bro. I think I've been saying this for like a month now. Before Google started to run up, I've been telling people Bard is solid, dude. Bard is solid, you know. And I think people are just now kind of getting it. People forget that Google is just a huge company. No, I disagree, Corey. Corey said if your job requires little to zero physical skill, then AI is going to take your job. I disagree. Okay, I disagree. I think things are going to become more technical as time goes on. It's not $40 a piece, Shah. It is $40, bro. Listen to me. It is $40 for 80 pictures, dude. So all of those pictures I showed you are all in one package. And so they sent me, let me see. So let me see. It might not have been 80. It might have been 40. But it's literally $1 a piece. Let me see how many it was. Okay, no, it was 80. It was not, they sent me, oh my gosh, dude. They sent me 115 pictures. And this is why I think photography is done. They sent me 115 pictures. 115 pictures for like $30 or something like that. And you have to understand, like, if you've ever had a real headshot taken, it's like $150 to get like a couple good ones, maybe like 10. So it's like $150 to get like 10 pictures. With AI, they give you over 100 pictures for like $30. And you don't have to get dressed up. You don't have to buy a suit. You don't have to do your hair. You literally just take selfies of yourself. And that's it. Yeah, so it's $30 for 120 pictures. Yeah. So headshots are not cheap. Do you think Bard is better than ChatGPT? In some ways, yes. In other ways, no. But in some ways, yes. It depends on what it is. They're both good at different things. Like Bard is good at programming, you know. Well, let's look at them, guys. So they're different. They're different suits, different backgrounds, and all of them. So they're all different suits, different backgrounds. Again, I can kind of show you. They're all different suits, different backgrounds. So like, here's a different suit, different background. This might be like one of the better ones too. But yeah, different suit, different background completely. And so they, different suits, different backgrounds. They work really well, you know. Again, completely, like, again, 120 pics for $30. It's a pretty good deal, man. If you could have your friends snap wedding pics and then AI program fix them and make them professional, then wedding photography. Yeah, that's basically what's going to happen too, for sure. That's basically what's going to happen. Now, again, we'll see. if it works. But yeah, well, again, I think it'll take over everything by far. You know what I mean? By far. Are you brave enough to hold through JP? Um, I don't know, man. I don't know. Um, yeah, these are bot attacks, like without question. It's unfortunate. You know, again, it's unfortunate. And again, it's one of the reasons like I'll probably just stream by myself from now on. You know, it's just too much work. Like I don't want to have to worry about all that stuff. So I'll probably just stream myself from now on. It's also easier for me to like pay attention to the chat. YouTube's a weird situation, man. But yeah, it's probably something where I think there's more engagement when it's just me anyway, where I can just kind of pay attention to the chat as well. I've always told you, like, I've always been really hesitant to bring on guests. Like, I get a lot of people that want to come on stream, but it's a stressful thing. And it's kind of my comfort zone of just doing the stream myself, you know? Yeah. Yeah, for sure. CT 100%. I have Tesla debating on cutting it at a small gain. I'm not mad at all. I mean, what I'm really more so mad about is that they're sending me bots, which is really what it is. It's either bots or they're signing out and then signing back in another username. Again, if the criticism had come from somebody that's actually been here, a while and actually talked before, that would be one thing. But again, the likelihood that number one, putting it in sub only mode basically made it go away. So what does that tell you? That tells you that, like, for whatever reason, this is like a coordinated attack. And it's unfortunate that that's how people spend their time. But again, it is what it is. Yeah, Mitch was good. Mitch was good. What jobs can AI not do? Yeah, again, I think it's an interesting dynamic for sure, because AI, I think it's going to be something for programming where people end up. I think it's going to do something for programming where people end up being kind of like overseers of AI. Like, I think where conventional programmers used to program, people are going to be like overseers of that AI. Yeah, I'll tell you guys this though. If you guys if I've never seen you before, and I can check whether you've ever commented before, if I never see you before and you're bad mouthing me, you're just gonna get banned. Like, it's pretty easy. Because again, there's a tell, and I'm not gonna tell the tell, but there's a tell from somebody that used to come to the stream, like a very specific way that they talk, and they use punctuation and grammar. You know what I mean? And so there's a very specific way that they do that is a little bit of a tell, I think. Yeah, you guys know me, when I whistle, the market goes up. Do you sell a service where you sit and chat during the day and give out advice? No, man, not really. applying them poker skills. Yeah, you got to use your tells, man. Again, these are just coordinated attacks, guys. So the real tell is like if you look at how long it takes in between posts. Stuart Mumford's good pawn, so I think Stuart's actually okay. Let me go back and read. Yeah, I'm sorry, we got to ban the trolls here, which is what it is. But yeah, this is why I'm not gonna have anybody on the stream. You know, Ben even said that he had an old crypto friend that saw the stream, and like that was kind of what they used to do, is like act this way. And so like again, I'm probably just not gonna have anybody else on the stream. It's just easier. Again, and I like running the stream by myself anyway. Yeah, I think David's okay. Pawn. I think Stuart's okay too. Let me see. Yeah, I think Stuart's okay. I'm gonna unhide him. But I think the other one's for sure. I've never seen him before. I don't think Powell has any effect. Mopex market makers seem to already know where they're ending. I don't know where this rally ends today. Yeah, I mean, I think the market's just up a lot right now. I think the market's just up a ton, you know? Yeah, man. Yeah, I mean, it is what it is, dude. It's just kind of an interesting dynamic where it's like, again, I'm not accusing anybody of anything, but like what I will say is that when I have a guest come on the stream and then all of a sudden I get a bunch of bot comments praising said guest, you know, I don't know if it was designed to look like that, but I'm immediately suspicious, you know, immediately suspicious. Again, it's all good. If they would have, you know, if they would have spent their money on that, it's all good. They're just going to get banned. Eventually, we're going to throw it in sub-only mode as well, so they won't be able to do it anyway, you know. Yeah, that's for sure, Stuart. Yeah, I recognize you. That's why I immediately said, hey. And if you look at your comments, you can kind of tell who's cool. But, yeah. I think they will raise rates. I think they're going to raise rates as well. Yeah, all good, Garab. Thank you, brother. I appreciate it. Yeah, Stuart's here every day, so you're good. Blue chips are up a lot. Yeah, again, I bought Tesla. I bought PayPal. I bought SQ. I bought Disney. I took most of my Disney trade off yesterday, though. So Disney, I'm basically scaled out of. Well, the easiest thing to do is just kind of ban them. You know, if you ban them and don't really acknowledge them, then they're, you know, they'll probably get discouraged. But yeah, it's just like I said. Yeah, all good, Pawn. I get it. PayPal here too. Yeah, I'm in PayPal right now. Again, we'll see what happens, but I'm in PayPal right now. SQ is moving up as well, man. SQ up to 59.60s here. My average is like 55. It's a small trade, but we made a bunch on this little bitty trade. Free fall Friday. I don't know. I think the market's up a lot. I do think the market's up a lot. No, I don't do any service, Stuart. Again, like my big thing is I am at this point in time, I've kind of backed myself into a corner where, like, even if I wanted to sell a service or a course, I've kind of been so vocal about not selling a course or service that I would get so much heat for it that it just wouldn't be worth it. Chart Prime is like a course. Oh yeah, the community's going crazy fast. Honestly, it's been one of the best years And again, it's nothing against any of my guests, but like I think what happens, man, is like I think it's very I think at first streaming is like I think at first streaming is intimidating. And so I think once people start streaming with me and they realize that it could be kind of exciting and fun, right? Then, people generally want to come on the stream like over and over again. And again, it really is kind of something where it's just more peaceful to stream by myself. I gotta worry about less nonsense, about less stuff, and it's just easier. And so having guests on is great occasionally, I think, and maybe we'll occasionally do it, but it's not something that I'm gonna be, you know, having a bunch of streamers on with me, especially not while I'm getting like bot comments that are basically praising those streamers. Like that. That's odd. You know. AM radio, bro. I don't even know if anybody even uses AM radio. Nvidia had a crazy day yesterday. Nvidia has earnings next week. I think it's on like the 24th. Yeah, I'm gonna send you a message, Chris. All right, so we're testing the highs now at 420.60s here, 420.60s. All right, so again, SQ is up. Again, Tesla at 177.40s, 177.40s. Again, we got SQ down there at 59.70s too. A-Track. Yeah, I mean, I think AM and FM radio are going to go bye-bye too. I think streaming is going to take over, and it already has to a certain extent. Yeah, I haven't used AM radio. I use FM still sometimes if my phone doesn't have service or something like that. But that's about it. That's the only time I'll ever use it. Yeah, for sure. Again, look at SQ rip up here. Tesla finally pulling back. Part of me wants to add a little bit more to Tesla. Uh, yeah. So again, FL, huge breakdown. Bad guidance numbers is really what this is. We have a great public radio network here. Yeah. I mean, I use FM when my service is out. Nvidia's just up so much, man. I'm just not going to touch it. Yeah, today the speech is about monetary policy. A lot of people think Powell's going to pump the market up, and again, I don't know, but a lot of people are saying that he's basically going to pump the market. Well, we'll see. Again, I don't know. Again, it starts at 11 here, so we'll put a timer up. All right, so right now it is about 7:45. So we got 3 hours, 14 minutes, and 25 seconds. Yeah, so there we go. All right, so we got 3 hours and about 14 minutes here. But look at Foot Locker just dumped down here. Looks like Max Payne today is 417. Oh, man, market has just been flying, dude. SPY up to 420s, almost 421s here, which is just a huge run back up. And so, yeah, we'll see. But that's a big run. And again, we'll see what happens. Google, man, has been one of the craziest run-ups over the last month here. Look at Google right now, guys. Google at 124.40s, 124.40s. Yeah, look at Tesla breaking down again. Part of me wants to buy Tesla, but if I buy Tesla, it's going to be like a longer term hold because of the Cybertruck coming out this year, right? I think the Cybertruck coming out this year, again, I really think it's going to break records. It's going to make Tesla pop up. The only part you got to be a little bit more analytical about, I think, in this situation is when does it come out and what the price of Tesla will be at that point in time? Because even if it does go up after the announcement, if it drops down 25% before that, it's still going to be a losing trade, So that's kind of where we're at now with this. What time is Deere earnings? Deere's already out with theirs. So John Deere, and again, I don't really know this business super well, but no, Deere's already out with theirs for sure. Deere came in at 965 EPS, better than the 859 estimates. I'll put the Deere numbers up on screen. You trust this run up? I think there's extension. Most of the time I'm just yeah, I don't know. Disney ripped up yesterday too, so we had a pretty good result from Disney. Do you ever feel like this stream has a lot of you talking about what you do, right? What do you mean? Of course, I'm talking about what I do. That's the point of the stream, is to talk about what I'm looking at, what I see, what I'm trading. But we also cover like financial news. Again, people tune in because we cover it fast. We cover it faster than anybody else. And so it's something that like people watch to tune in to get the data quickly, as well as like we're a reliable place to find economic releases and Jerome Powell rate hike press conferences and earnings reports. And so like, yeah, no worries. But yeah, there's the Deere numbers. Deere did good. Beat on both metrics, beat on EPS, beat on sales. So you can kind of see the numbers here. EV cars still got years to go. I don't know. I think they're becoming more and more efficient. The battery issue is the biggest issue with EV for sure. Yeah, I mean, yeah, it's all good, yawn, man. Again, they're trying, but like in the end, people know, What time is the Jerome Powell speech? It's at 11 Eastern Standard Time. But yeah, there's the Deere numbers. Do you think college become less valuable as AI advances, or more focused on skills that AI can do? I think doctors, lawyers, STEM subjects will become more popular because those are the ones that you're going to have certainly a more ingrained future, if that makes sense. But, I think it could be anything. Powell speech is at 11 Eastern. Yeah, Tesla all the way down to the previous closing price. You see it's right down at 177s. 177s. And again, we'll see if it holds there, but yeah. Yeah, I think again, I don't like to get too super political, but I think universities should be free. I think I think the whole world standard has free college, and I think people travel to other parts of the world to take advantage of that free college and free university, and so I think it's something that the U.S. should do. And people are going to say, oh, well, that's socialism. And sure, I agree with free college. I think to a certain extent, college should be free. And I think our medical, I still believe in a capitalistic medical sector, but I think they need to do some changes there too. But I certainly believe in free universities and free colleges. I think big education has gotten way too crazy. And the prices of college have just gone up so much to where it's not really a reasonable thing. Like you need to take out a second mortgage to pay for college, which it should never be that expensive. It should never be that expensive. And so, if my tax dollars are going to be spent on anything, I'm okay with them being spent on education. I think that's okay. But I think it needs to be the right education as well. I think like there's certain degrees that are just worthless. Also, and people tend to get them a lot. Now, some of them aren't, but I think a lot of degrees are just worthless. And so if I want my kids to go to college, but only if it's for the right degree. Like if they want to be a lawyer or a doctor or something like that, sure. But yeah. Yeah, I'm sure there's going to be a lot of people that disagree, and it really is all love. Again, I'm not. This is not something where I'm necessarily right or wrong. This is just kind of a subjective opinion. And again, maybe I'm wrong, and maybe there's some nuance to it that I don't see. I'm not sure. Y'all might be right, but for me, I guess I'm okay with my tax dollars being spent on education. Tesla's bouncing up. It bounced right at the previous closing price, right at 177s. And again, I've said this before, and I'll say it again. I think like I'm for letting anybody that passes the bar pass the bar and get their law degree. Historically, the way you became an attorney is you would pass the bar and you would apprentice under an experienced attorney. So like instead of having to go through like 6 years of schooling or 8 years of schooling or whatever it is for an attorney, instead of having to go through all that schooling, you would pass the bar, and that alone took studying, like extensive studying. But once you pass the bar, you were basically an apprentice, and I think you learn more under apprenticeships than you would go into a 4 or 5 year, getting a 4 or 5 year degree in that subject. And so I think they need to bring back apprenticeships in a lot of different things, and lower the barrier of entry for attorneys and for doctors to a certain extent, maybe. But I think doctors might be the exception to that. But again, it's arguable. Yeah, apprenticeships are always better. What's up, Shepard? They already have grants for low income. I don't make much, and I'm paying over $25K a year for my daughter. I'm not pay for someone ride. Yeah, I feel you. But again, I think they just need to lower the cost, make education free. I think that's the right move. At least they don't have to even make it free, but if they made it like $1,000 a semester, you know what I mean, that would be fine. It's not like the teachers are really getting that money anyway. I know professors make more money, but yeah, it's arguable. It's certainly nuanced. But yeah. That's pretty good, Cap. What's up, Beach? Yeah, I mean, I'm making more than most college graduates right now as well. And so, you know, uh, I understand more than anybody that college can be a waste of time. I think it depends on what you're doing. I think if you're in business, right, starting a business is going to give you more experience, a better leg up, and more, a better odds of succeeding in business than going to school for business. I think business degrees, they can be good. I'm not saying all business degrees are bad, but I think business degrees are good because they can also be somewhat like universal, where you can get into a lot of different a lot of different grad schools with business degrees. It doesn't necessarily have to be a business school per se. And so I think in that regard, business degrees can be valuable. But like an entrepreneur, like you don't need to go to college for it. That's just a waste of money. I'm not sure, Shaw. No, all good, Tony. Hey, good morning. It's weird with education. We should all want a more educated population, but I don't know. By making universities free, well, the universities are going to lose money, of course, but I'm okay with that. Uh, Look, I think we should do for college. I think we should do the similar to public schools, similar to like high schools and elementary and middle schools, where you have public colleges that are mostly almost free, where they're very cheap. They're very cheap. They don't cost 10 grand a semester or whatever. They're very cheap. And then if you want to go to like one of the more prestigious ones like Harvard or whatever, then those can be more expensive. I still think they need to be cheaper than where they are now, but I would understand that structure as well. But again, I get it from both sides. I understand. um all right, guys, and again, Google up to 124s, man. Google has been on a tear here. Look at Google up from 104s up to 124s. $2,500 was a lot in 96. So yeah, $25. 2,500 was a lot in 96, much more than it is now. Hey, bud. There you go. You got it, dude. Nice job, bro. All right, love you, buddy. Hey, don't come on stream if you don't have a shirt on, man.
I didn't know that.
I understand, but I love you, buddy. All right, it's all right. Yeah, Foot Locker took a dive here. Foot Locker took a dive. Bad guidance numbers is what dragged Foot Locker down for sure. So just bad guidance numbers. Yeah, 6K is not bad. Software engineers too, good too. No, I talked about it yesterday, Chris. Jordan, he is a very wealthy man now because of what his mom did. All right, look at the SPY pop. So this is why, like, if you guys want to see why I look at the 200 EMA and the volume weighted average price, again, I've kind of said it before, but like this is very useful because this brings two specific levels right around the same point. And so when the stock pulls back to it and bounces, you know, you got two different sets of traders. Some of them are watching both. Some of them are watching just the VWAP, and then some of them are watching just the 200 EMA. And when all of those start to buy right around the same zone, you can kind of get a little pop back up like this here. So it can be powerful. But yeah, Deer. Foot Locker missed big in terms of guidance, I believe, right? So Foot Locker just had bad guidance. But I understand Foot Locker going out of business. And I'll explain what it is, right? It's not that shoes are not doing well. Shoes are still doing great. People are still loving shoes. Foot Locker is going out of business for a few different reasons, right? And they're very obvious reasons to me. I don't even have to research this. I can basically, like, pretty accurately bet on why Foot Locker is struggling right now. I don't think they're going out of business per se, but I think over time, Foot Locker will get worse and worse and worse. Number one is they haven't had a green year since 2016. And so that shows the long-term trend. They're green on the last 12 months, but what I mean is like they've been on a downtrend for 7 years. You know, now it's a big range downtrend, but they're on a downtrend. The reason I think they're failing is this, okay, is that because number one, even if they don't, we are talking about brick and mortar stores, right? Even if we are talking about brick and mortar stores, Foot Locker is becoming less popular as a store in general. You know, Champs, there's other stores that are becoming big in the mall. Like that's where most people buy their shoes is in the mall. If it's a brick and mortar store, they go to the mall to buy their shoes. Foot Locker is becoming less popular in that regard. There's less Foot Locker openings. There's more closings for Foot Locker. And what's the new one that came out? It's got like it's like a yellow sign on the front of it. Anyways, chat, y'all can help me out with that. I can't remember what it is. But anyways, new stores are opening up that are becoming more popular than Foot Locker. That's the first thing. The second thing is that kids and people in general are ordering their shoes online now. There's a ton of websites that allow you to order your shoes online. A lot of the time, Foot Locker doesn't have stock anyway. And so it's like if you want some of the like popular shoes, it's going to be hard to find your size at Foot Locker a lot of the time, regardless of that. And so brick and mortar retail buys are just slowing up, I think, as well as the fact that people are ordering more stuff online. And I think Foot Locker, even if we're looking at specific brick and mortar stores, I think Foot Locker is becoming less popular and less relevant in shoes anyway. And so I think that all spells bad news for Foot Locker. But again, maybe I'm wrong. Again, I could be wrong here. I don't know for sure. These are just my own thoughts on it. And so, yeah, we'll see. Yeah, more choices and sizes online for sure. I love you. Have a good day. One of them are broken. One of them are your set that you ran over. Yeah. Yeah, online shoes. I don't know if it's Amazon. I think people are just going to Nike, the Nike website, and buying it there now. You know. I love you. Have a good day. Yeah, JD. JD is what it is, J-Spec. Yeah, the best alumni. Yeah, that makes sense. Yeah, exactly. Franchise. There's just different shoe stores coming out. Again, I'm a sneaker guy. I love Air Maxes. I'm not a big Jordan guy, but I love Air Maxes. I've been wearing Air Maxes for 20 years. And again, I just don't see Foot Locker be in the store anymore. Again, there's too many other stores. When I go to the mall, and I'm not usually sneaker shopping at the mall, but when I go to the mall, I don't see Foot Locker being used a lot. Foot Locker is usually pretty empty, and like other stores like JD and stuff like that are usually a lot more active, like a lot more people there. Yeah, for sure, Bernardo, 100%, dude. Hey, what's up, Tyler? Yeah, for sure, TJ. Online boutiques, exactly, Angel. All right, so look at Tesla popping all the way back up. I was really thinking about adding more to it at the bottom, but I just didn't. You know. Well, it depends on how long they've been around, Tim, I think, you know. Yeah, it's been a while since I've been to a Foot Locker. Yeah, it's the same writing on the wall that we've seen in like Bed Bath and Beyond. Absolutely. 100%. All right, guys. Big Papa, Jerome Powell today. You see, we got the timer. About 3 hours left. Let me know what you guys think. Yeah. We'll see. Big Papa coming on stream. We'll see if he says something good. Do y'all think he's going to say something good or not? Let me know. Amazon, too convenient. Yeah, for sure. Amazon is taking away a lot of stuff, man. And again, it's one of those reasons why, like any brick and mortar store, I'm skeptical of. It depends on what it is, but there's certain stores where I'm less skeptical. There's certain stores, obviously, where I'm more skeptical. But there's certain ones that I'm definitely skeptical of. And again, brick and mortar stores, I think even if we're not talking about Amazon specifically, I think, you know, I think they're losing steam. Obviously, I think there's some ones that are still safe. Like I think Best Buy is still probably okay. Like I think people still prefer to go buy their tech same day, and I can go to Best Buy and get a mic or get a keyboard or get a headphone set or get whatever camera. JC, yeah, but I think JC Penney and like Macy's and stuff like that are still they're gonna fail long term. Again, Macy's. You know, I remember Macy's, I remember saying Macy's was weak last year or in 2021 at like $30, $40. I thought it was way too highly priced, and it has just kind of fell drastically. There's certain companies like this, though, that I might start to like short. Foot Locker's a little bit different, though. Like, I still think that sector, that niche, if you will, is kind of more immune to retail collapse relative to like Macy's or Dillard's or something like that. I think shoes are still something where people like to go. They like to try them on, stuff like that. See how they look on their feet before they wear them. And so I think that might extend the longevity a little bit, but not forever. But again, maybe I'm wrong. Target is expensive too. Yeah, Target is super expensive. What is Adapt Max? Is that a form of Air Max? I don't know anything. Oh, I do like the Adapt Max, bro. I gotta find some of those, dude. But these are so expensive, man. Like $500, bro. I like sneakers. I don't like them that much, dude. I'm one of those people like, listen, I can't keep my sneakers clean for the life of me. I really can't. Like, I try so hard to keep my sneakers clean. Like, I buy Air Maxes, I buy Nikes, I buy whatever. I can't keep them clean for the life of me. I was one of those kids when I was young who would buy sneakers, and everybody would be like, ooh, those sneakers are so nice, John. I'd buy like Air Maxes or something, and everybody would be like, ooh, I like your shoes. And then the next day, they're like scraped up, you know? So I can't keep my sneakers clean. My ADHD is a little bit too strong for that. I forget I'm wearing new shoes, and I just kind of mess them up. Plus, I was a skateboarder, and so I was never really programmed to take super care of my shoes. If you know, I buy a lot of stuff from Amazon. I buy clothes from Amazon now too. Honestly, what I think is keeping JCPenney and Macy's alive is their credit card infrastructure. Yeah, they try to get me to go with a credit card every time I go there. I never do. You know. Yeah. Yeah, Target's expensive too. The option contracts of what expired today? Today's not quad witching, is it? Oh, it's the third Friday of the month. It's not quad witching though, right? What is today? What options expires today? Is it just option contracts? Maybe that'll add volatility. If you don't know what quad witching is, I don't think quad witching is today. Quad witching is a day that only happens once every while, in which all the major contract types expire same day, and so this includes stock options, index options, stock futures, and index futures. But I don't think today's quad witching. It happens on the third Friday, but I don't think it's today. I know today's the third Friday though. I think we're still pretty far out from that, Timon. Okay, so today's monthly options expiration for the third Friday. Got it. Yeah, I didn't think it was quad witching. I knew it wasn't because I would have heard about it already, to be honest. But yeah, I don't think he always pumps. I think he's careful with what he says, though. You know. Yeah, so all these options expiring today. That'll be fun. That'll be interesting. We'll see. So you got the scuffs on your shoes from Alain, kind of. Yeah. Yeah, Big Papa at 11 here. We got the timer up, guys. Y'all be ready here. Yeah, Disney's doing pretty good over the last few days, man. You know, again, we're very green. We ended up riding Disney up to like 94.20s and then took a lot off. And now we're sitting on a little bit. We're still up about $140 on the remaining position, but over 1 trillion contracts expired today. More volatility. Interesting. Yeah, that'll be fun at the open. We'll see. Google up there too. Yeah, so look at the SPY pull back here. Tesla did rip back up some. Disney's still doing pretty good though. Google all the way up to 125s here, man, which is a crazy big move, dude. Crazy big move for Google. Disney only current thing owned. So Ali, listen, I'm not saying there could be a timer like right above me right there. I'm not saying there could be, but it might be right above me, you know. I'm learning Spanish, and so allí, you know. Yo soy Juan. El timer. Allí. Mi amiga. Anyways, I don't know if timer's right. I just kind of said that. I'll have to look up what timer is. But I'm learning Spanish, you know. My dad speaks fluent Spanish, and so I'm learning Spanish. I'm going to try to talk to my dad in Spanish, you know. Disney's still moving up a little bit, though. John said we get inflation under control. Say you 2% are closed. Do you think the markets will be less volatile? I don't know. I don't think the markets have been very volatile right now. I think the markets have been very sideways. I've been using Babel, I think is what I've been using. It's pretty solid. It's pretty solid. All right, so we are pulling back a little bit on the SPY down to 420s. All right, guys. So again, SPY at the middle here. Tesla's starting to pop up a little bit here, guys. I think the market is prepping for a crash. Maybe. I've been hearing people say that for months and months and months now. Foot Locker down 25%. Is it affecting Nike, Adidas, Puma? Yeah. You're looking at stock market charts, Dan. So again, we are starting to break under the 200 EMA in that volume weighted average price level, and I think that is a pretty good level. I was looking at. I started to bounce right at that 200 EMA volume weighted average price. And this is why I watched that level, was because it holds really nicely there. Google's still up to 125s almost here. I'm going to put a 1 minute chart here for Google. It's up to 125.19s. Uh, Again, Tesla up to 177.50. Yeah, so we got some FOMC stuff. What's up, Guts? What's up? Good morning. Hey, thank you, man. Well, the chat's been pretty good about not saying there was a crash. I think a lot of the people that thought we were going to crash aren't in here. Now that we're not crashing, I think their pride took a hit, and now they're kind of, hey, baby. All right. All right, guys, markets rip it up. Look at Google up here. So again, Tesla testing that same kind of double line level, that 200 EMA volume weighted average price level is getting tested right now. So the same exact spot that we talked about on Google is starting to get tested now on Tesla as well. Meta, a lot of people have been talking about Meta. We can put Meta up really quick. And Meta's been on a freaking tear too. Look at the daily chart, man. And Meta, Nvidia, Google, they've all been on pretty big tears yesterday, the last 6 months or so for sure. Bullish sentiment is fed. Yeah, I think we're going to continue raising rates. And the reason I think we're going to continue raising rates is because the market's still doing okay. The bank fears and recession fears are less. And so I still think they're going to try to combat inflation. I think they're going to do 25 basis points. But I'll have to check to see what the banks specifically project here. Hey, congrats, Guts. That's amazing, man. That's amazing. All right, guys. So, yeah, we're pushing up. Yeah, but that's great, man. Palantir has been on a huge run. It's been on a huge run back. It's up to almost 12s right now. It's up to almost 12. So, again, we'll see what happens, guys. Let me know what you guys think. Do y'all like Palantir? Maybe it's turning into like a mid cap now. Let me know what you guys think. It could be. It could be. All right, guys. So yeah, look at Palantir. Do you guys like Palantir? Palantir. Yeah, sorry, I always say it wrong. Hey, what's up, JT? Still mad about Baba? Nah, man. Listen, my Baba trade was a day trade. Baba might have dropped yesterday, but I was talking about buying it at 89, and it ripped up to like 94. And so it literally ripped up over 5%. After I was saying I wanted to buy it. Now, of course, it ended up turning back down afterwards, but again, that was a little extended dip by day trade that I would have made money on. And again, regardless, it's not that I was ever mad. Again, I just don't want anybody pressuring people to do anything. I don't know if it's necessarily good, either, regardless of whether anybody's right or wrong, Have you started buying banks yet? No, not yet. I made some money on banks and the craziness. Like I made money. I bought Wells Fargo, Bank of America. I ended up selling them, but I did make some money on them, buying them on that big pullback and selling into the rip. Some people definitely mind. Palantir is one of those big joke stocks. Never again will I get. Never again will I say
Palantir.
Wrong. Never again.
Palantir
is how you say it, and I'll never say it wrong again. Guys, look at
Palantir.
Are you guys trying to buy
Palantir
right now or what? It's up to 11s, almost 12s. So it's at 1170. It just broke out of the previous closing price. I don't know if this is necessarily a meme stock, but yeah, it's worth watching. Yeah. The name that shall never be said wrong again. Yeah, it's just kind of like a running joke of the channel. I used to say Neo wrong. I would call it, and I would spell it out NIO. And so people would make fun of me for that. So I just kind of joke around them. I might say some of these names. Y'all know how many crazy names there are in the stock market, bro. There's a bunch of these biotech stocks, especially, are kind of, tough. I think Palantir is an AI stock, though, right? Or a tech stock of some sort. Economical. Yeah, economical is the other one. And it's like, I know the meaning of economical. Like, economical means like relative to the price, or relative, like good value for what you get is what economical means. But, again, it's just a habit. I think economical smooth flows a little bit better, so I ended up saying it. But yeah, it's all love here. John, why didn't you buy John Deere? It's got my name. It pushed up and then down, waiting for a pull through market. I don't know, man. Deere is up too much for me. Again, I don't usually buy gapping up stocks. If a stock's gapping up, I very rarely buy it. It's just my own style. I'm not saying I'm not going to miss out on opportunity having that type of standard with my trades where I only buy down stocks. But it's just not really my style of trading. It's just not, Again, my trading style generally revolves around looking for big extended pullbacks, buying the dip, and riding the bounce, Look at the SPY back up to 420s here. I guess, guys, the question today is, like, with Jerome Powell speaking, does the market hold these gains? I don't know. Again, I don't know. What do you guys think? Does the market hold these crazy gains it put in today? Because with Jerome Powell speaking today, I'm ready. What's up, Oscar? Yeah, I mean, let me know if you guys think it'll hold. Yeah, we'll report the Canadian data in 2 minutes. I'll cover it. At the very least, I'll cover some of it. Yeah, so Canadian data comes out today. It is on core retail sales data for Canada comes out. It's at minus 0.8% expectations. Retail sales are expected to come out at minus 1.4%. But yeah, core data at minus 0.8%. We got about 45 seconds. We'll cover it for sure. Do any of y'all trade true? Do any of y'all trade crude oil? Do any of y'all trade crude oil? So CL/CL. It's pretty volatile. Pawn brought it up, and I think it looks pretty interesting. It's down a lot. The only problem is, doesn't crude oil over time expire? Like the futures contract. I know the option expires. When is the next rollover for option contracts on crude? I know the E-mini is supposed to roll over sometime soon. It's supposed to roll over every quarter. So again, let me know what you guys think. Again, we're still in Disney here. Palantir's up there. Here's Disney. And again, we scaled out of most of Disney yesterday. You can kind of see we're still up about $140 on the trade. We're down about $50 today. SPY testing highs right now. So the SPY is still surging up, testing highs. Yeah, maybe we get a rug pull. I don't know. I doubt it, but it's, of course, possible. Okay, just rolled over trading. July now. Got you. Okay, cool. I appreciate it, Pawn. Maybe. Big red day Monday. Well, that's if they don't get the debt thing straightened out. But we do have until June 1st. And I think they're going to get it done. I don't think they're going to, Here's a question. Do y'all like cruise ships? I read something yesterday that said the cruise ship industry is going out of business. I don't know if I agree with that necessarily, but the logic behind it was something like millennials are no longer using cruise ships anymore. Again, let me know if you guys agree with that. Powell speaks at 11, and there might be a timer right above me, but I might be wrong. Yeah, we're going to cover the Powell meeting for sure. SQ popping back up. And honestly, we made a bunch on SQ. Our average is 55. Buying it on those pullbacks seems to be very powerful. Again, we're in Disney right now. We'll watch Disney to see if it comes back up too. See if we can get back some of the losses on the day, but I think we're just riding the gap down. Tesla at 177.75 here. Look at the SPY. SPY just broke highs of pre-market right now, guys. So the SPY just broke highs of pre-market. Let me look at what the polls say here. So will the Fed... So right now we're 50-50 split on will Powell pump the markets up or not. 50-50 split out of about 700 votes. I got Tesla at 177.60s here, 177.60s. Disney at 93s. People also said movie theaters are going out of business. I don't think they will completely go out of business, but I think they're going to be impacted by technology advancement. I think, maybe I'm wrong, but I think they're going to be impacted by tech advancement. Maybe I'm wrong. Again, I don't know. Yeah, I mean, Disney's still up a lot the last few days. Yeah, I'm not one to take a cruise ship. I remember I get seasick. Like, I get motion sickness and seasickness. So I get sick on any vehicle, basically. If I'm in a car, I get sick. If I'm in the back seat for extended periods of time, I get sick. If I'm on a plane, I get sick. If it's like a long play ride. If I'm on a boat, I definitely get sick. So I remember going on a cruise when I was young and I just got sick. So I can't do it. Yeah, cruises are great for sure. But it's not something where I think people are buying less of them. I think if you want to like travel out of the country, Yeah, Bard versus GDP. Who do you guys think? What do you guys like is better, Bard or GPT? I like Bard better for programming. But which one do you guys like more, Bard or GPT? And the SPY broke highs again at 420.70s here, 420.70s. Hey, what's up, Emmanuel? Hey, good morning, dude. Disney up to 93.20s here, guys. 93.20s for Disney. So big run up, man. Disney a day ago was at 91 or under 91. So now it's almost up to 94s. Carnival needs to do some upgrades. Yeah. Hey, what's up, Benny? All right, guys. So, Powell, 11 a.m. I'm ready. Again, do y'all think it'll help or hurt the market? I really don't know here. We spell Bernanke here. All right, so SPY dipping down a little bit after breaking highs. All right, so it's just a yeah, so we got the market open. We're about to cover here too. pullback here. Part of me wants to buy the dip here. Maybe I'm going to buy a little bit in the futures market. Again, remember, so next month's going to be really interesting. The reason it's going to be interesting is because next month we have CPI and PPI. We have CPI and the rate hike decision same week, within consecutive days after each other. So we get the rate hike decision, we get all that stuff. We get all that stuff same week, basically. All right, so today at 11 o'clock, it's going to be a conversation with Chair Powell and Ben Bernanke, the former chair of the Board of Governors of the Fed. It starts at 11 a.m. Eastern Standard Time. So yeah, this will be fun, man. I'm excited for it. We'll see if it moves the market here. Again, the market's been on a huge tear. All right, guys. So look at Tesla rip up. SPY just broke highs again. So the SPY just broke highs again here, team. All right, guys. So broke highs got up to 420.70s here. 420.70s. Now dipping back down a little bit now. All right, so yeah, this is gonna be conversations. Ben Bernanke was the guy that did the 2008, 2007 financial crash and covered that. How many futures contacts? It varies. Up to 5 is usually what I do. Hey, congrats, Pawn. That's a great trade. Hi, what is your strategy for intraday trading? Due to so many news events almost every day, I find it difficult to manage my open trades. Maybe you can help. Well, you just got to keep track of everything, to be honest here. Yeah, I mean, I think movies are. I think people are still going to go to theaters because I think there's an event aspect of it. Like people are kind of going to the event. Like people take dates there and stuff like that. I think that'll always be there, but I think it might dwindle down some to a certain extent. So, but I think people will still always go. You know. Oh yeah, I'm feeling much better, dude. Much better. I've had an ear infection, dude. The last like week, it's been rough. I think Google's flying up right now. Google is just flying up big. But yeah. Yeah, SPY is hitting new year today highs. Yeah, I mean, we can look at the SPY up to 470.73. I mean, the yearly high is actually like we haven't hit it yet. So the yearly high is at 430s. So we still got some time away from that. Like the 52-week high is what I'm referencing here. Yeah, so the 52-week high is what I'm referencing. It's at 431.70s, 431.70s. Disney's still pumping up some. So the Gary V conference is going on right now. So France is signing with PFL. But yeah, SPY's still ripping up very strong here. Tesla pulling back a little bit though. So the SPY's kind of consolidating around the highs of the day. We'll see if it holds. Yeah, $240 is great, man. If you're green that much, not a bad idea to bow out. I mean, you can take two approaches when you're green here. These are the two approaches that I use, of course. So they're not specific to everybody, I guess, if that makes sense, right? So these are the two approaches that I generally take. And again, they're not specific to everybody. The two approaches that I generally take are, if I'm up hundreds on the day, there's two potential things that I'll do. I'll either take larger size and scale up my size and then use that cushion as just that, a cushion. So like, for instance, if I'm trading X size, I might scale up to 2X because then I have a cushion to play off of. And that's when some big gains can really go there. And you also have kind of like a risk-free way to do that, where you build up a cushion of $200. And then you now have a risk of $200 that you can set. So even if you lose, you break even on the day now. It's not the end of the world. But if you win, then you could be up $400, $500, or $600. And then you can kind of repeat that process if you want until you get, funded in some of those funded account programs. And I think that's a really smart way to do it, of course. Am I bald? No, man. Dude, I got a lot of hair, bro. Honestly, I got too much hair, dude. I'm not bald at all, bro. Honestly, I got too much hair for my age. I'm just glad I have hair at all. But yeah, definitely not bald. I got glorious hair, bro. I definitely top 3 hairs in the world right now for sure. Nothing against my bald people, it happens. But no. If you want to know really why I wear a hat, the reason I wear a hat is because I get up in Texas time. Usually when I start this stream, it's like 4:30 in the morning here. And so I don't feel like doing my hair in the morning, bro. I'm going to throw a hat on. Boom. Done. Not have to worry about it at all. How long should I practice the trading style with doing paper trades before moving into the market? It depends on what your results are, is what it is. Yeah, I have curly hair. I have very curly hair. So, I actually have, if you look at my AI headshots that I was showing people earlier, you can see how curly my hair naturally is. My hair is super curly. If I let it grow out, it's really, really curly, but I try to keep it short because it really is kind of a lot to deal with. It's super curly. Yeah, definitely good reasoning, wholesale bidding. Again, it's just too early, bro. I don't feel like doing my hair in the morning. And my hair is so curly that I get my hair is crazy when I wake up in the morning. It's kind of neat now because I wore a hat for the last 2 hours. But if I would have, again, it's just too early in the morning. Yeah. Definitely top 3 hair sets in the world right now. But no, I got my dad's hair. They say balding comes from your mother's father. My mom's dad was bald by like 25, you know, and so somehow I got my dad's hair. My dad's still got a full head of hair, and he's like 70, you know. So yeah, I've been watching Yellowstone. Part of me wants to let it grow, you know. But yeah, guys, market's pulling up. Still in a very nice upward trend. You can kind of see the 200 EMA and the volume weighted average price. I've been kind of confirming that trend we've had for a while. Like here's the 200 EMA and the volume weighted average price. You can kind of see those levels here. They've been holding really nicely. Yeah, that might be why I have tons of hair, Mike, you know. Yeah, Yellowstone's good. Yeah. But I was watching that. Part of me wants to grow my hair out now. But yeah, when I get up in the morning, it's early, dude. It is early, you know. And so like when I get up in the morning, I'm tired and I don't feel like brushing my hair. And if I just came on stream, my hair would just be like crazy. Again, SPY's starting to move up to test that previous high level. The previous high was right around 420.70. We're at 420.62. Elon Musk is probably loving this price point right now. Yeah, I mean, the way I would do it, will Powell be hawkish? I don't know. I hope not, of course. But I think the market, I think if we do have some extension, it's on the upside. I think we might be a little extended on the upside. I think we pushed up just a lot the last few days. And so I think that's something to consider. Again, I'm not saying we're going to drop, but I think we're up a lot over the last few days. And I think that's something you want to pay attention to because, again, we're just up a lot the last couple of days. Yeah. Yeah. But for the paper trading question, what I would do is, again, like, I think what happens to some traders, and this is a very common thing. So again, if you're new and you're paper trading, listen to what I'm about to say. It makes perfect sense. All right. Like I've been trading for years and years. Like you got a lot of people that are trying to act like stock market experts or whatever. But again, my TOS account's got like, 50K in it right now or so. And so I trade a big account. But what you guys got to understand is that trading is about learning how to trade under pressure. It really is. So trading is about learning how to trade under pressure. And the mistake a lot of new traders make is that they will trade a paper trading account with a specific size. And then they'll try to move over to their real account with the same size. So they'll try to go from like, say they're buying 1,000 shares on paper. They'll try to switch over to a real account buying 1,000 shares, and then it's wildly different, and they get wildly different results, and they don't understand why. They don't understand why they're making X amount on paper, but when they switch over to real money, they're just kind of getting their butt kicked in the market. And I'll explain you why. It's because you have to scale in to real size in trading. You're not going to be able to take 1,000 shares on paper and then be able to do the exact same thing with 1,000 shares with a real account and have the same results. And the reason you're not is because trading is very stressful. It doesn't matter how hard you try to ignore the emotions that come with trading. But when you trade real money, you're going to cut your winning positions shorter. You're going to get out of your losing positions late. You're going to do a lot of things that you didn't do on paper where you're completely emotionless. And so that's the difference. And so for that reason, you want to start trading real money very, very, very small. Like you want to start trading real money very small, like without taking huge size. If you can make $10 a day, you can make 100 or 1,000. You just need to do different size. And so again, starting off small is key because number one, most traders are going to lose regardless of how well they did on paper. They're going to lose when they put real money up because their emotions change. They have much more emotions. And so the larger sizing you try to trade in the beginning with a real account, the more money you're going to lose. And so just trade small for the first, few months of you trading a live account. And then once you show progress, once you show good results, then you can slowly scale up. That's the right move, And so just remember that. Like you don't need to trade large size in the beginning. Emotions are completely different. Again, you're going to cut your losses too late. You're going to hold on to your losses too long. You're going to cut your winners too short. It's just going to be different than paper. And again, I think that's a pretty common mistake. And again, I'm sponsored by Top Step. And so like if you want to use a funded account program, which I think is a great way to do this. So a great way to get started with everything I just said, these funded account programs are useful because what they do is they allow you to trade under pressure, but with less risk, right? And so they give you a demo and they test your skill. And it's a hard test. It's not easy to do. Most people are going to fail these challenges, but it's very cheap to take. The base package is like 130 something if you use my link. And again, they're sponsors, so I'm biased in their favor. But it really is a good thing where it's like, if you're good enough, you can pass it. And once you pass it, you keep 90% of your profit. They've been around for over a decade. They're the most legit one in the world. They pay out millions every year. They fund thousands of traders a year. And so if you're good enough to pass it, you get a lot of the benefits, a lot of the rewards for it. If you're not good enough to pass it, you still lose much less than you would with real money, and so they give you a demo, they test your skill. If you can hit the profit target on the demo and pass the rest of their testing, then they fund you. And I think that's a very good way to get started and get your feet wet without taking on that risk as well. But again, I'm biased, of course, because they're a sponsor of mine, and so I'm naturally biased in their favor. But if you want to check it out, there's the link. Hustle Smart says 1,000% agree, or 10,000% agree. Listen to him, guys. I've been doing this for 8 years, and the emotions and frustrations or stress never go away. You just get used to it. Yeah, what I always try to say is, like, it's kind of like Pavlov for my psychology majors, maybe. It's kind of like Pavlov and the dogs, right? If you don't know the story of Pavlov and the dog, Pavlov was a scientist, and he was studying the effects of conditioning on dogs, right? And so what he would do was he would ring the bell and feed the dogs. And he did that over and over again. He would ring the bell, give the dogs a treat, or give the dogs food. Ring the bell, give the dog some food. Ring the bell, give the dog some food. And so he took the food out of the equation, and he studied the dog's reaction to it, to where he would ring the bell, but he didn't put food out there. And what would happen is that the dogs would drool. They would salivate, right? And he recognized that he could condition them to drool, basically, without putting the food out there. And so just by ringing the bell, the dogs would drool eventually. And so it's called classical conditioning. And in trading, it's the same thing. SPY just broke highs again, got up to 420.77. Let's see if we can break 421 ahead of this craziness. But yeah, the SPY's ripping up big here. But the point behind the Pavlov comments is that you need to condition yourself in the same way through trading. Like, you need to condition yourself to avoid the same mistakes that you previously made. And the way you do it is just by getting your reps in, doing it over and over and over and over again until it becomes second nature, to where you don't even need the food out there, if that makes sense. You're going to do the right things regardless of anything. So that's the way to learn. And it's one of the reasons experience trumps everything else, because like a course can teach you so much, but experience is going to teach you how to handle those things. And that's the more important thing. They always say trading is 90% emotion and 10% skill. And that's probably true, but you got to get your reps in and do it. Tesla breaking highs again. Tesla up to 178, just tapped 178. Again, we are holding a little bit of Tesla here too. So that's nice. SPY just ripped up almost to 421s here, team. So we'll see if it holds. What time for Powell? It might be in the title specifically, as well as in a timer up there, guys. It could be. I'm not saying it is, but like it might be up there. It could be. Well, losing everything will teach you risk management as well. That's a conditioning thing too. When you lose that much, you don't like that feeling. And in some ways, they always say losing is necessary, and it kind of is. And the reason is because almost all new traders are going to destroy their account, and it's kind of like a necessary like milestone in a trader's career, because what it'll do is it'll make you get your mind right a little bit. Like, you will remember the burn that feels. Again, I remember when I first started trading, and I lost $4,000 within like a month, dude, and I was distraught. I almost wanted to cry. Like, I remember, like, this was like years and years and years ago. I almost wanted to cry. I almost cried. I remember I didn't cry, but honestly, I became pretty close to it. I came pretty close to it because $4,000 was a lot of money to me at the time. Now it's less to me now, but it's still a lot. I'm not saying it's not a lot, but the point is, I remember those losses. Like, I remember how that felt, and I wanted to avoid that at all costs moving forward. And that taught me to build risk management systems, and I think that's a necessary thing for a lot of traders, is you got to build risk management, Yeah, for sure, Joshua. Getting liquidated, it really is. Yeah, I don't miss it either. Yeah, and again, in that situation, it kind of makes sense because, again, it's kind of like you remember that burn. You don't want to feel that burn again. You want to avoid that burn at all costs, man, And so you got to just avoid it. I'm gonna have to make more coffee today, man. I've been running out of coffee earlier and earlier now. Is the link not working here? Let me try it again. Hold on. Might be an old link here. Let me try. Here, try this link if that link doesn't work. That link should work. Let me try. Let me try going on it here. Let me try clicking on it myself. Okay, yeah, mine works. Yeah, there's the top step link if you want it. John, say someone gave you 1 mil right now and you had to swing trade it for the next 10 minutes. What do you do? I mean, swing trading is holding overnight 75. And so 10 minutes is not a swing trade, it's a day trade. So what do you mean by that? Do you mean like what stock would I buy for a swing trade right now? Do I have a maximum amount of time that I can hold the position? Is going to be the answer is going to depend on that. Like, is there a maximum amount of time I can hold the trade? If there's no maximum, I'd probably buy Apple, you know, and just kind of let it sit. I'd buy like Apple or Walmart or Disney or something. Let it sit. If there's a maximum, I'd probably have to research and find something extended on the downside that probably has a higher probability of going up short term. That's probably what I would do. What's the maximum? Again, if there's no maximum, I'd buy Apple because Apple's one of the more sure things long term. Apple has a lock, especially on young people. Young people do not want to buy a Samsung. You know, Apple, you know, they you could still do group chats, but you can't use emojis, the same emojis that they use. And again, what Apple did was really smart is that they got a lock on young people. Like young people, like I have a 13-year-old, I have a teenage daughter. Again, I have the Z Fold, so I'm a Samsung guy, right? Like I'm a Samsung guy. My daughter would not use I could buy my daughter a brand new Z Fold and she wouldn't want it. You know, she would want a 5-year-old iPhone instead. So I think Apple long-term makes sense. Oh, 1 day in and out? I mean, that's too short for me. I really have no idea what anything's going to do in one specific day. Again, what I'd probably do is look for something that dropped down big over the last few days that I still thought was strong, and I would buy that. But again, I have no idea what that would be right now. Again, I bought up a bunch of stuff over the last few days, and I'm green in most of them, so I bought up. And there's too much market influence today with like Jerome Powell. Like I bought up SQ, I bought up Tesla, I bought up Disney over the last few days, and I've mostly scaled out of a lot of those already. You can kind of see Disney right here, so we are still up. Our average on Disney is 91.80, and we had much more shares than this. We're still up about 160 on the last 100. So I've already rode Disney up a lot. SQ is another one I'm in, and you can kind of see SQ has had a pretty strong few days. You know, we bought SQ. Our average on SQ is 55.80. So our average on SQ is right here. So we rode this nice little bounce up. We caught it almost at the bottom there too. PayPal we're a little red in, but it's pretty flat, pretty break even trade. And then Tesla, we're green on Tesla as well. Tesla, we are up. Our average on Tesla right now. These are all swing trades. These are all trades that I held overnight. My average on Tesla is 175.81. And so my average on Tesla is about one right here. So we're green on Tesla too. Sorry to hear that, Sam. That's rough, dude. Shit, I'll share some personal experience. On Tuesday, I lost a funded account on only day 2. I cried that day, took 2 days off, and now I'm back, but stronger than before that experience. Yes, Sam, just listen, dude. Listen, man. Again, number one, it's very difficult to pass these challenges. It's not easy to do. It's something that I always try to be transparent about because it's not something that's easy to do. It's something that's very difficult to do, and it requires a lot of discipline. And so what I would recommend is trading small size. Trading small size, give yourself a loss limit and stick to that limit like glue. Like if you lose X amount, you got to give it up for the day. You can't double your size. You can't add to it. That's the best way to do it, All right, guys, look at Tesla. Tesla's still pumping up, though. Tesla up to 178s right now. Again, if we look at like Apple here, Apple's been surging up too. Apple up to 176. There's the SPY. So SPY pulling back a little bit now. Thoughts on Bitcoin after Powell? Ooh, I don't know. It depends on what he says. Yeah, if you got funded anyway, you're doing pretty good, bro. Honestly. Yeah. All right, we still got about 2 hours, guys. About 2 hours. So Powell is interviewing or doing kind of like a conversation with Ben Bernanke, who was the chair Fed in 2002. And so Ben Bernanke was the guy that was the Fed chairman during the 2007 crash. I'd sooner buy Nike than Foot Locker, 100%. I would rather buy Nike than Foot Locker. Foot Locker can fail and Nike still succeed. But I don't think, vice versa, I don't know if that's necessarily the case. And so in that regard, I think it's stronger to invest in Nike than Foot Locker. I think Foot Locker's got some vulnerabilities long-term. Specifically, like if you go to a mall, Foot Locker has less people than something like JD. Right, so JD's becoming bigger, Foot Locker's becoming smaller, as well as like the mail orders versus online order, or mail online order versus brick and mortar retail battle. And I think online stores are beating everything. I think as well as like we have the recent rise of like different sneaker online outlets that allow people to buy whatever sneakers they want. And they vet them to make sure they're real and stuff like that. I think that is going to make, over time, Foot Locker become weaker and weaker unless they drastically change their business, which they could, but I think there's risks there for sure. Nike dip. Well, it depends on where Nike's at before all this. So like Nike's still up a lot on the year, and so yeah, Nike's at 115. So it was a dip, and it might be okay. I mean, like when we look at Nike here, I think we got to look at like the range here. So Nike is now right around 115. So Nike's right around the support level. So there might be a bounce, but like for instance, if we break under this support level. Oh, it's too big. If we break under the support level, there could be problems that arise from it. Yeah, it sounds like it's just your Wi-Fi. My TOS is usually very fast. Daily Grind says, can you explain the Powell speech and how it affects the market? Like, what are you supposed to look for? Good news, bad news? Yeah, sure, man. So, again, this is a broader conference that is titled, so right now we got like Bowman speaking. I think she's speaking right now, but this is titled Conversations with Chair Jerome Powell and Ben Bernanke, the former chair of the Board of Governors of the Fed Reserve System. So this is a conversation with basically the current Fed chairman with the old Fed chairman, Ben Bernanke. Maybe they're going to talk about the similarities between now and 07 or what's different now from 07. Again, things that could positively influence the market are inflation is getting better. CPI and inflation metrics like PCE were lower than expected. They're optimistic. Words like that could cause boosts in the market, but of course, we really don't know for sure. Things that could drag the market are words and phrases, I guess, like inflation is still elevated. We see a recession coming this year in any way they can phrase that or say that. I think that might make the market drop. Stuff like that. Like basically, when the Fed speaks, you got two different adjectives, I guess, used to describe sentiment, right? One of them is hawkish, right? Hawkish means bearish, means contracting monetary policy. Basically, it means bearish for the Fed. So if you hear hawkish tone, that means that people think that he's going to be bearish. Basically, think that he thinks that we're going to have a less economical growth, if you will. If you hear dovish, so dove means bull. Dove means expanding monetary policy and expanding markets. So dovish versus hawkish is kind of what you listen to. But it's just you just want to listen to what they say in terms of sentiment, optimism, worries, inflation, stuff like that. Like that's what you want to listen to. You want to see what they're talking about in terms of inflation, whether they think inflation is getting better or worse. The parallels between now and 07 and 08, all that stuff. That'll be what you want to really kind of watch for and pay attention to, if that makes sense. All right, market's popping up. Tesla up to 178. Yeah, and SQ still moving up too, man. Honestly, my trades are looking much better, dude. PayPal looking better today, bouncing back some. Tesla looking really nice, man. Tesla's been certainly helping my P&L today. I see. Thanks a lot. Yeah, no worries. It's not in 40 minutes. It's an hour and 40 minutes. Market opens in about 20 minutes. Yeah, usually there'll be a little bit of leeway with the PDT rule and stuff like that. But it varies, man. It really does. There's Nike. We're going to get ready to trade some futures today, too. We were trading the NASDAQ yesterday, too. So here's the E-mini. We'll try to trade that a little bit too. And again, you can kind of see the SPY, Nike breaking lows down to 115. Maybe there's an argument for that, guys. Like maybe there is. I'm sponsored by Top Step, and so yeah, check out Top Step. Let's not plug any of the other ones. Top Step's kind of my sponsor, and so But if you want to check out the link, you can find it in the description. All right, so market's still dipping down. Part of me wants to buy a little pullback here. Let me look at the SPY and see what we're looking like here. I like this little pullback ahead of it, but the market's just up so much that like this is going to be a short-term day trade. So we got one contract here, one contract of the regular E-mini here. When does the E-mini roll over? I have to look. I know it's going to be sometime soon. And it's been a pretty good week too for me. All right, we're right at 420.50. All right, a little bit of a retracement there. Who's shorting NVIDIA? It's definitely not me. Yeah, Disney's doing solid. Again, I'm still in Disney right now. We're just gonna keep holding it. I'm also in SQ, but I don't really short stocks like that though. I'm definitely not shorting NVIDIA, especially not NVIDIA. NVIDIA's been on rocket ship up, man. Yeah, check out the link in the description. You get 20% off if you do, Jay. All right, so we're kind of consolidating around here. Yeah, all good, dude. Yeah, I'm just not one to short these blue chip companies very often. Like, I would rather not buy it than short them. I think not buying them is a little bit better than shorting them. I think if I short something, it's going to be like a mid cap that I think is overly inflated and overhyped. I prefer to trade one or two instruments. E says, "Hey, do you prefer to trade one or two, or do you prefer trading whatever's volatile?" I usually try to trade just the E-mini or just the Nasdaq. That's kind of my style. Everybody's different though. Trading, everybody's a little bit different in trading. But for me, I usually just stick with just the E-mini. Hey, well, good luck, Fu. I hope you make some money, brother. This is called futures trading in 75. So this is day trading futures is what I'm doing right now. I'm probably about to cut this though. It's been a pretty good few weeks here. What is this bouncing us? So this is Tesla. Tesla bouncing up a little bit more. That might drag this is the S&P 500 75. So this is me day trading the S&P 500 futures contract. So when you see it move, I'm looking at Tesla, I'm looking at Apple to see how they're going to influence things. Market opens up in about 14 minutes, guys. 14 minutes. All right, so again, you can kind of see right above me. I'm still pretty flat here. All right, there we go. Nice little green trade here. We'll give it some time to work. All right, again, slightly green here. I want to give it time, though. I like the pop back up. I'll go ahead and take that. So we just cut again, I'm just trying to build up a cushion. So we just took that little profit off. We just made about $25. Yeah, for sure. Yeah, all good. 75. I'm buying the Nike dip. Hey, good luck, man. Yeah, Nike's pulling back pretty heavily. I usually like buying up pullbacks like this, but yeah, Tesla, I'm still green on. I'm just kind of letting it sit. Yeah, I think a lot of people there's a very famous quote, and the quote goes something like, "I don't fear the man," and it's from Bruce Lee. "I don't fear the man that has practiced 1,000 different types of kicks one time. I fear the man that has practiced 1,000 or one type of kick 1,000 times." I butchered that a little bit. Yeah, so he said, I don't fear the man who has practiced 1,000 different types of kicks. I fear the man that has practiced one type of kick 1,000 times. And I think for trading, it's very true. Like, you don't want to be too broad and try to do all these different things. Like, I'm experienced enough where it's like, again, my TOS account's got like 50K in it, and I can day trade and swing trade and invest on that. And then I can try to get funded on Top Step on the side and do all that stuff. But if you're new, I think you probably just want to stick to one thing, one thing. All right, guys. So, yeah. Again, y'all subscribe if you haven't yet. I haven't thrown it in sub-only mode yet, but we might soon. So subscribe if you haven't. We appreciate it. Man, I could have held this too. Look at the market pump up here, guys. So the market's ripping up. Look at this. Look at this huge rip. I don't want the banner to block it, but look at this huge rip. It's a big pop. Again, you can kind of see the range here. And a lot of the time what you'll see me do is like range trading. Let me find a way to put it. I can put that right there. That's actually a good spot for it. A lot of this is just kind of range trading, and you can kind of see the slight range that the market is in right now, where we got the top and bottom of the range. I think it's a slight upward trend, but it's very choppy. So it's mostly like a range. So if we could start to break over this top, I think we're going to look a lot stronger as well. And you can kind of see the SPY start to test that high up there at 420.73. And so this is just the S&P 500, the E-mini. I don't do options or anything. I think we trade sideways today. I think we might trade sideways. I think we trade sideways until maybe Powell speaks, you know. Powell speaks at 11 a.m. Eastern Standard Time. I'm going to test the highs up there. Again, we'll see if it holds. Yeah, we'll see if Disney holds. Again, Nike is one, like a lot of people are talking about buying the dip, but Nike's still up a lot over the last year. And so I think it's something that you want to pay, like you want to be weary of. Again, it just goes against how I trade. And whether the way I trade is neither right nor wrong. It's just how I trade. And so, yeah, it's something that like Nike is still a little bit too green for my taste, because the way I like to trade is I usually like buying stuff with the understanding that I can hold it long term if I really need to. Like, I don't mind buying stuff and just kind of sitting on it long term if I need to. But in that regard, it needs to be only blue chip companies, like only blue chip companies. It can't be any small caps. It can't be mid caps. It needs to be something that I understand is going to be okay no matter what long term. And I think that's only a handful of companies. But yeah. All right, we got to pull back. Yeah, again, regarding the bin comments, let me see this. So, Adalis, say something back if you're not a bot. Adalis, say something back if you're not a bot. Who's the other one? Filmo, I can't tell if you're a bot or not, but you say something back too, man. Because again, what I'll tell you is it's incredibly weird. If we've got a bunch of people that have never said a word before, all of a sudden, you know, like Ben's only been on a couple streams. He's not going to be running the channel with me, of course. So it's very strange. Again, my guess is it's bots, which is odd. It's very kind of a weird thing. But, you know, if somebody wants to pay for that, I guess let them pay for it. But it's definitely a little suspicious, if I can say so myself. TJ, yeah, I'm good, man. Natty Gas, what's Natty Gas doing? Yeah. Okay, no, okay, so at least you're not a bot. Um, but again, you're not a bot because of that. I think the more likely outcome is somebody's been spamming a specific thing. You know, you might not be a bot, but it's hard for me to tell at this point. Uh, yeah, you can think Ben was cool, but like, you know, again, we're gonna have guests on the channel sometimes. You know, gold down. Yeah, I'm a holding gold. I bought GLD, and we're green on it today, but we're still down total on the trade. Plus 2% today. I don't know. No, he's great, you know, but it's, again, I don't really want to go into it. No, I like him. He's cool. I mean, again, I think I've made up the decision to not let anybody else come on stream though. Because again, y'all have to understand, again, I'll go over it one time just because people are asking me about it. Hey, thank you, Suddy. I appreciate you, brother. Thank you, man. Yeah, the comment sections are really bad, but no. Okay, I'll put it this way. This is where my suspicions lie. All right. Over the years, I've had a lot of people that want to be guests that come on the stream. All right. And again, y'all try to put yourself in my shoes. Again, I'm going to try to do it. The opening bell's in 3 minutes. Point is, over the years, I've had a lot of people that want to come on the stream. You know, so they want to come on the stream. And then I think sometimes they get addicted to coming on the stream. And so, you know, for whatever reason, I think some of them really like coming on stream. And so when I have a guest come on stream and then all of a sudden I get 10 people saying the same thing, phrased differently, using the same grammar rules, like basically having the same grammar within about 2-minute period, completely randomly, it's pretty likely that they're either paid to do that or they're bots, you know? And so it makes me incredibly suspicious. And again, it's one of those reasons, like, nothing against anybody, but I think from now on, I'll probably just keep the stream just myself, you know? Hey, thank you, Burge. I appreciate you, brother. Thank you, man. Nah, listen, I'm not having anybody else on the stream. It doesn't matter how many. Again, it's just too much drama, you know? Like I said, if people are sending me bots and weirdness because of one specific guest, I'm just never going to let that guest on stream. It doesn't matter how much, you know, they say. It's not about him. It's more so just about, like, it's just too much drama to worry about. Market started to pull back a little bit, though, so I'm glad I cut it where I did. Bitcoin, man. Bitcoin, again, I think Bitcoin's just been in a range between like 25 and 30K. I think that's what it is. Yeah, here goes the bell, guys. We got 1.5 minutes. Jonathan, it's all good, dude. Bot love here, you know. But no, it's all good. SQ, pull it back. It's at 59.30s here. Again, we're in a small position, but my average is 55.80s for SQ. Oh yeah, we're gonna stream his whole speech. We're gonna stream, you know. Profit taking. I don't know. There's a big pullback here, guys. There's a big drop. I mean, we've basically given back. Look at the volume weighted average price, though. So that's what I'm watching here. If you look at the SPY, we've effectively pulled under the volume weighted average price in the 200 EMA. And we got 1 minute into the opening bell, guys. 1 minute. Fed Williams is speaking right now, I think. But she's not going to move markets like Powell will. You know, there's a difference between every other Fed speaker and the Fed chairman, Powell. Like, the Fed is going to move markets more than anybody, the chairman. So Powell's going to move markets more than anybody else here. And so that's why we're covering that. Like Williams and Bowman, they might speak and all that stuff, but it's not going to move markets like that. Yeah, dude, I get it all the time. I get people asking me what the market's going to do. I have no idea. I always tell them the same thing. Nobody does. You got a 50-50 chance of being right or wrong with green or red prediction. And so I see that very often, but who knows, man, what the market's going to do. All right, so there's the opening bell, guys. There's the opening bell. All right, so again, look at the opening bell. Tesla has dumped down here. There's the... Yeah, I don't know. We got a little bit of opening bell action here, though. Look at the Tesla drop just now at the opening bell. The SPY is sideways so far. Nike just broke down even more, down to 114s. Bitcoin up to 27K, though. And then SQ, again, is at 5950s. Hey, thank you, Nori. I appreciate you. Thank you. Yeah, we try to be relaxed and chill. I think when there's no guests, I also pay attention to the comment section more. So I think when there's no guests, I also engage with the comments in the chat much more. And so I think it's easier for me to just have a peaceful stream that way. Yeah, for sure, Joe. Thank you, bro. Yeah, again, it's nothing against any other guest. Ben was great. Ben was super knowledgeable, but like, again, if I have a guest on stream and then I get a bunch of bots like trashing me and saying good things about Ben that aren't talking to each other completely randomly out of nowhere, then it's just kind of like, again, it raises my suspicions. And it kind of confirms what I already thought before, which is that I just wanted to keep it myself, you know. Look at SQ break down a little bit. I think I'm going to go ahead and take profit. My average on SQ is 55.80s, 55.80s. And so I'm just going to go ahead and cut SQ. So I just got out of SQ. Tesla bounced all the way back up here. All the way back up. Up to 177s, almost 178s. Hey, my guy, thank you, JT. I appreciate the $5, brother. Thank you, man. Palantir, I think I said it right. Make sure I get it right. Palantir up to 1220s today. Tesla up to 178s here. What else am I in? I'm in Tesla, so that's good. PayPal. Let's see what PayPal's doing. PayPal's down. Luckily, I was already green some. What else am I in? Let me see. I'm in Disney. What's Disney doing? Disney's falling back down. But again, I've already taken most of the profit off on Disney, so I could hold the rest break even. And my average on Disney is 91.80s. And so I got some room to hold there too. Wingstop. Yeah, get an A-ball for those questions. Yeah. Yeah, I don't know anything about PLTR. You know, like I don't know anything about them. So again, Tesla ripped up. We got a little doji here on the bottom of Tesla. And so I'm watching that. SQ did bounce all the way back up, so maybe I sold that one a little bit prematurely, but still in Tesla, still in PayPal. And PayPal bounced back some too. Gold bounced back a little bit today as well. We're green on gold. And again, we're green a little bit already. We've made some money here, but I am trading the E-mini. Now y'all got me looking up the Palantir CEO here. I don't even know what they look like. Hold on. Oh my gosh. He looks like Casey Neistat. I mean, let him rock whatever he wants, bro. My guy can do whatever he wants, dude. Let him do it. I'm a fellow curly hair guy. My hair's curly. It's not this curly. I don't know if he permed it or not, but I'm a fellow curly hair guy, so I get it. He needs to just, if you're asking me though, he needs to just let it go, you know. But all right, guys, market back over the VWAP here on the SPY on the E-mini. No, man. Dude, I've got the top 3 bladders in the world right now. Anthony says, do you have a catheter for when you're streaming? Bro, I got the top 3 bladders in the world right now for sure. Definitely top 3. Market's up. Tesla up. SPY up. What is this on the top? Nike down. Nike breaking lows again. What diaper is best? Top 3 diapers for sure. Beginner trading diapers coming soon. Again, Disney ripping up back up to 92.70. Still down, but hey, we ended up cutting SQ because we were green and enough to not worry about it. I want to see if this holds though, so I might buy this pullback to the VWAP here and see if we get a little pop back up. So we got one contract here. We're already up about 25 on the day. I will take profit quickly as we try to build up a cushion, and if it gets too red, we'll scale down to the micros. But we are right above the VWAP here, and so I'm hoping this holds. And luckily, we got a cushion on the day, and so even if this doesn't, we'll still be all right. Very close to cutting this one, though. See if it retraces back up. There's a nice little retracement. All right, so we're close to flat now. Slightly green now. All right, so we just cut it. We should be up about $50 or more today. Let me see. Okay, yeah, we are up about 65 on the day. Here's the P&L so far. No losses yet in futures, at least. But we'll see if we, again, the volume weighted average price is such a big trend indicator that like it can be really relevant too. Market's hasn't been slow at all. Market's been flying up. Nike's strong, man. Again, Michael Jordan makes about $400 million a year from Nike. Look, market's ripping up. I could have held a little bit more, but again, I'm trying to build up a cushion, and then we'll take larger swings once we have that cushion built, and we can also swing into that cushion. Gold, rip it up. I'm in gold too. It's not ripping up though. It's down. Jordans are still popular. They're for sure definitely still popular. I like Air Maxes myself, but yeah, I like Air Maxes too. Dunks are cool too. I like dunks. Again, market's moving up though. Let's look at this resistance level here. All right, we're up to 179.40s here. Tesla up to almost 180. Hey, you love to see it. I'll take it. I'm just gonna stay in it. I would take some off of Tesla, but I think I'm just gonna stay in it. We'll look to see if we buy this pullback now too. Yeah, I don't know, Jonathan. Maybe you probably know more than me about. Yeah, I like the 97 Air Maxes. You probably know more than me about the sales of them regardless, bro. So I'm not arguing with you there, man. You might be right. So we're pulling back, dipping a little, a little bit more down here. Man. All right, so we got this little dip. The question, like, if you look at the SPY here, so we are pulling back down. I'm gonna buy this dip. We got a cushion on the day now. I like this buy zone, so I might add 2 contracts here. So we got 2. Let's hope we don't flush too much. I want to see if we bounce at the 200 EMA right here, but we're not going to hold this super long either, though. We got a little cushion on the day. I want to see if we surge back up, but we got 2 contracts. Taking a little bit larger swing since we have a cushion now. There we go. There we go. All right, we're at least flat right now. I want to give us time to surge back up. Market's been on a crazy run here. I'm watching the 200 EMA closely, though. If we can't hold here, I'm going to cut it, but very close to cutting it now. We keep retracing as we test that low, but I think it's depending on what Tesla does right now, too. There's a lot of stuff that's kind of going back and forth. I like that down wick. I mean, some buying pressure just rolled through. There we go. All right, so we're flat now. I really like this down wick, though. I think this down wick looks really nice. Maybe I'm wrong, though. Watching the SPY here on the right side to see what the S&P is doing. All right, so we just cut half. We got a really good trade where we can just kind of let the rest work if it goes our favor. If not, we can get out pretty close to flat. All right, so I'm just going to get out there. So we are now up over 100. Or no, we're up 100 now. So got a cool little $100 cushion. We could have held longer. And so you can kind of see our accuracy is pretty on point. We could have held longer, but I think we'll just wait. Do you think it'll continue into the rally? I don't know, man. Yeah, I think Georgia's still pretty big, but thinking about buying this dip. Look at the SPY pop here. So the SPY is up. Y'all do me a favor, hit the like button, bump the like number if you haven't already. All right, so we're gonna buy this dip again. I might add a little bit more to it too, but it depends on if we surge back up here. Tesla's right at a really nice support level, and so it looks like we might get a pop back up. So we're flat on the trade now. The only problem, though, the only thing I do not like about this is Apple right now. So Apple is starting to fall back down a little bit, though. Tesla's moving up, but Apple's the heavily weighted stock relative to Tesla. All right, so retracing a little bit. I could add some to this here. I'm gonna add one more contract, fix my average, and see if we get a surge back up. There we go. There's the surge back up. I like the down wick. You see, we're right back to the 200 EMA. And so I want to see if we bounce off that 200 EMA level and head back up. That's what I'm looking for, at least. We're right around our break-even level. And I like this level, though. I think this is a good little pullback spot. And at this point, I've accepted the risk I'm taking in it. So if we break under the previous candle here, we'll just cut it. Trying to hold again. The problem now, though, is, in all honesty, and the reason I'm starting to be kind of skeptical of this trade is because I'm going to get out here. I see a couple different things happening that I don't specifically like right now. One of them is that Tesla just broke down under that 178 level, as well as Apple is breaking lows right now in the market. And these two things influence the market heavily. And so, yeah, Google ripped up to 126 and now it's pulling back some. So I think we're probably pretty flat on the day now. Yeah, we're flat. And that's all right. We took our swing, but again, I see too many things turning right now. Apple is right around lows. Google has retraced a lot over the last like 4 minutes. Tesla's still pumping back up though. So like if there is an argument for like strength here, depends on what people think Google and Apple is going to do here. I guess we could buy this dip. Well, maybe buying that dip was the wrong move. VWAP's right underneath this, but SPY's turning choppy, and it could be choppy just ahead of Powell. Yeah, I'm going to cut this. It's just too much risk. It might actually bounce right here, but, you know, we took our couple little swings there. And we're not down much, so we still got some room to take more trades. But, you know, SPY right at the middle range here, unfortunately. I'll probably pivot at least for a little while to the regular E-mini, I think. So, like, here's the regular. I'm going to probably pivot to this right now. Instead of attacking I'll pivot to the micro is what I meant to say. So instead of attacking the regular, I think I'll trade the micro. Because again, what happened I see is Google just broke under the VWAP and the 200 EMA. Apple's right around the lows. Tesla's starting to pull back a little bit now too. So all of that bear action coming through, I'm just going to sit, you know. Yeah, Disney's all the way down. I mean, we're still green on the trade, though. You know, and we already took so much profit that, like, Disney was up a lot over the last few days. So, like, over the last 48 hours, Disney's still technically green. For me, though, I just got to wait. I don't mind sitting on my Disney trade. I'm still green on the trade as a whole. We're only at 100 shares. So, it could be a lot worse, I guess. Hey, thank you. Thank you, C. Thank you, Clown. I appreciate it. ENPH, in phase. In phase is trying. It's right around the volume weighted average price. Again, we'll see if it holds. Again, we got Big Papa, Jerome Powell talking in about an hour. So we still got some time. But Big Papa does speak today. Bitcoin up or down? Bitcoin's flat. Probably flat ahead of Powell, I'm guessing. Maybe I'm wrong. So on this day in 2009, Daimler acquired nearly 10% of Tesla, and he paid $50 million for it. That stake today would now be worth $55 billion for 10%. Elon has said that deal alone saved Tesla. And so interesting. This was back before any of the new cars that were actually successful. So All right, market's still flat, chop it up and down. Again, Powell hopefully will ignite some markets. I think there's a lot of apprehension heading into it, though. You know. Just bought Disney back. Yeah, again, my average is 91.80s. So Disney's at 92 something right now. So like I'm not gonna add to it. I've already made money on the trade no matter what. And so at this point, I'm just kind of sitting. Like I'll sit if it bounces back up to $100, I'll be pretty sad. But I'm not gonna add to it either. Adding to it will just add more. Adding to it will just we'll just add more emotion to the trade, if that makes sense. And so I don't think I'm going to add to it. I think I'm just going to sit tight. Market's pretty flat. You can see the SPY, Tesla, right at the middle range. Apple's been breaking down too, so it's not just Disney. Apple flushed. Microsoft's actually still doing pretty good, man. Microsoft has been so strong lately, man. It's kind of crazy how strong it's been. Gold? Yeah, you can look at like the gold futures contract. It would be GCM3. Gold futures. Is this like the wrong contract or something? Why does it look like this? There it is. All right, so here's gold futures. Gold under 2K. Gold has been on a nice little downward trend. Tesla starting to pop back up. SPY bet moving all the way right back up too. Microsoft right at the previous closing price. Disney bouncing back up a little bit as well. Tesla moving back up. Yeah, we'll just sit on these. All right, guys, we got less than an hour before Chair Fed Powell does the interview with Bernanke. So 11 a.m. We'll see how it moves markets, man. It could move it a lot. It could move it a little. We'll see. All right, SPY just tapped over right around the highs of the day for like a second. Disney all the way back to 92.30s or so, 92.20s. Tesla's still trying to hold there. You can kind of see it on the bottom right chart. We still got about an hour before Powell today, guys. About an hour. People are waiting. Again, we'll see what we get. Are you guys red or green today, guys? Do we do another poll? What's the current poll? The poll, does Jerome Powell pump the market up today? Okay, we got about 1,300 votes. 52% say yes. 48% say no. We're going to do a Twitter poll as well. And you can give me a follow on Twitter at Beginner Trades. But the poll we're going to do is, does Jerome Powell say hawkish or dovish things today when he is interviewed with Bernanke? All right, guys. Ow. Do your boy a favor, hit that like button here, team. We appreciate it. So yeah, we're gonna do a Twitter poll right now. We've kind of neglected it a little bit the last few days. Hawkish, dovish. We're also gonna have an option for neutral here. There we go. And we'll make this poll 3 hours long. I like it. All right, vote on that poll, guys. Hawkish, neutral. At Beginner Trades is my Twitter handle. At Beginner Trades. Again, we got what is this? This is gold. So we got gold up. We're gonna put the regular E-mini up here. What is up with? I gotta fix Quant Tower to where it doesn't do this. This is a pain. Every time I switch symbols, I gotta do this. There we go. I like the SPY right here, though. I do like the SPY. We're gonna buy up a little bit on this dip, though. See if we can start to take some trades. There's 4 contracts. Again, we're back over the 200 EMA in the VWAP here, and I think I might have exited the last one somewhat prematurely. But again, we'll give it time. I don't hate this pullback zone. Hopefully Powell says good things. All right, so we got some votes already. Again, if you want to vote on that poll and give your boy a follow here, here's the link for that. For noobs, how is the Powell speech related to the market? So it's related to the market because he's the Fed chairman, and they raise rates or lower rates, and they make the Fed's decisions regarding raising and lowering interest rates. The federal funds rate, to be specific. When they do that, it influences the market heavily. And so what the Fed thinks is going to influence the market heavily. So what the Fed thinks is going to move markets for sure. Now, sometimes it moves it more than others. But if he comes out and basically says he thinks the market is really solid, that it'll be okay, that we might not hit a recession, that's going to help the market. If he comes out and says that inflation is still high and that he's worried about the market, that'll negatively influence the market, obviously. And so he controls the market to a certain extent, and it's incredibly important. What he says is incredibly important to market activity by far. So it's just something that you really want to be careful with. You really want to understand how he can move the markets in that way. And just in the last minute, we already got like 10 votes or so already. So again, most people are hawkish or neutral. No dovish votes yet. Tesla looking very strong over that 179 level. And again, we're in Tesla right now. Disney bouncing back some too. We're only down about $100 today. Yesterday we made almost $200. The day before that we made about $300. So, we got a cushion at least this week. But it is a Friday. But it's a little bit different of a Friday where we got Fed speech today. All right, so we just took half of this position off. We're still getting a little pump up here with 2 contracts. Exited out a little bit more. We got somebody said hawkish, but the market will rebound from any negative impact. Maybe. I think the market's up a lot, though. Y'all got to understand the market has surged up the last few days. Blue chips especially. Like, really the biggest one has been kind of Google. Google has made a huge run back after some weakness once ChatGPT came out. Google has made a big, profound bounce back here. And so that's something to watch. I'm neutral on those. Erebus. Word on the street says he won't be raising rates. I disagree. I think he's going to raise 25 basis point rate hike is what I think he'll do. So we cut that just in time. Look at that drop. So I don't know if this is something that they're saying, but we got out of that just in time. But I think he's going to raise interest rates. I'm pretty sure he is at least.
Than output inflation.
All right, guys, we got less than an hour here, guys. Yeah, he's definitely going to say, awesome, this channel is a hidden gem. Crypto trader here. I really appreciate it. Hey, thank you, DJ, my guy. Thank you, man. I appreciate it. Yeah, again, my big thing here, guys, is like I don't sell a course. I don't sell like my own service or anything like that. Like we have sponsors and stuff, but I think like no matter where you go in both day trading and swing trading, I think like everybody's trying to sell courses and stuff like that. Like I just want to put everything out there for free. I don't sell a course. There's no paywalls behind our content. I don't even claim to be a good trader. Like I certainly don't claim to be an expert. And my big thing is just kind of creating a free resource and community of traders where I just got this free community of traders here, and this is what I like. And so my job, sometimes the truth hurts, and so sometimes traders don't like what I'm saying, and I get it. Like if you're really in a position and you're emotional about it, or if you're holding something that I criticize, you might just dislike me. I want you guys to understand, like the beautiful part about the stock market is that we can all disagree on things, and it's okay. That's all. It's all love here. It really is. Like I might be wrong about a lot of the stuff I say. Definitely top 3 most wrong trader ever. And look at the SPY breakdown here. So SPY break it down. Very choppy action though. Like if we zoom out here, this is the price action since the opening bell. So the price action since the open has basically been this. So since the opening bell, we have done this basically. We have gone, we've gone up and then down and then up and then down. We look like a McDonald's sign right now, but the SPY is flushing down here. Wow, flushing down. I don't know if this has to do with something that they're saying on that press conference thing going on right now. Like if we look at the Fed.
Shock whose causal effects were picking up. Okay, so this is one argument. The other argument you could be making is that the various...
This is the Thomas Laboch Research Conference. So it hasn't started yet. But yeah, conversations with Ben Bernanke start in less than an hour, guys. Less than an hour. So y'all be ready. We're getting ready here. Also top 3 most correct. Yeah, definitely top 3 for sure. Usually a flush. Yeah, I mean... Right now, we're actually pretty flat. Like, again, you can kind of see the price action here where we're not doing too crazy. Like, we've gone down, we've gone up, we've consolidated on the top end of the range. We're back down to the bottom and then into the end of the range. To understand the market here, like, why are we doing this? To understand the market, ahead of big economic influences, like ahead of rate hikes, ahead of economic data like CPI and PPI and rate hike decisions, ahead of all that stuff, you got to think about the psychology of the markets in general, not just the stock market, but the futures market, everything like that. You got to think of the psychology behind it. And the psychology is this, okay? People understand the influence that these press conferences and speeches are going to have over markets, not just the stock market, but broad markets, futures, crypto, stocks, all that stuff. This is going to influence them at least a little bit. And so whenever you have unknown results here, so whenever you have unknown from stuff like this meeting, so whenever you have unknown, what it means is that traders, especially traders that are trading size at like hedge funds, at banks, they're going to slow down because they understand like they're not going to take a huge sizable investment right now ahead of this, or at least they're not going to take swing trades. They're going to flatten out their day trades and they're going to wait for Powell to speak because there's really no edge in gambling on what he's going to say, because unless you have insider information, nobody knows what Powell is going to say. They don't know if he's going to say good things. They don't know if he's going to say bad things. I mean, you got a 50-50 shot. And so a lot of people make predictions. And again, if they're right, which is just luck, they try to act like there's some stock market expert. but nobody truly knows what's going to happen during these meetings. And so taking a huge position ahead of them is a risk that most pro traders that are giving liquidity to the markets are not going to take. And so if you want to know why we're flat ahead of these, it's because all the big boys are not trading, because they're waiting for Big Papa Powell to come out and say whatever he's going to say that influences the market so they can have stable price action afterwards. They have a little bit more clear judgment on what's going to happen in the future. That's why we get choppiness ahead of this stuff. And it's a little bit self-evident, of course, but for those that might just be entering the market and not fully understanding, that's why we get choppiness. Definitely top 3, JT. It's all good, bro. I'm a big boy and I'm trading. I'm talking about the big boys like banks. I'm talking about like the funds. Your little $5,000 account ain't the big boy account, brother. Mine ain't either, dude. My little $50,000 account is peanuts compared to them, man. So again, I'm not doing anything either. I'm semi-joking. I don't know how big your account is. I'm just kind of making a joke. What are we thinking today? A breakdown or 50-50? I don't know. I looked at the poll numbers here. Poll numbers are pretty split. We got about 1,500 votes. 52% of people think, yes, the market pumps up with Jerome Powell. 48% say no, the market does not. If we look at our Twitter profile here, 44% are hawkish, 12.5% are dovish, 44% are neutral. Tesla ripping back up, though. Disney ripping back up. So, again, there's choppiness in the market. And, again, I've slowed down my trading drastically because, again, this is not really a big edge. Unless you're going to completely attack the range, which means, like, you buy at the bottom, you buy at the bottom, you cover at the top, you cover at the top, you cover at the top. Unless you're going to do something like that, the attacking momentum is useless right now because there's no momentum. It's just range-based sideways action. Now, if we break under this specifically here, if we break down, under this, that's a completely different story. But we're not there yet. And again, we got to just chill out and wait. Walmart. Everybody keeps bringing up Walmart. Let me take a look. Walmart's weak. They had earnings, but they're weak today. Again, Walmart's still up a lot over the last year. And so it's not like Walmart's in trouble. Walmart is trending far ahead of everything else in terms of companies. Look at Walmart over the last year. Walmart opened the year up at 117. It's at 150 now. And so think of how big of a percentage gain that is. It's about a $35 gain. And so that's like a 20-something% gain in the last year. 20-something% in the last 52 weeks. That's a pretty big gain. So again, Walmart's up a lot. If it's pulling back right now, again, it's not the end of the world for Walmart. They're up a lot longer term. Tesla's starting to test the top of the range again here. You can kind of see the top of the Tesla range here. It's trying to hold. Yeah, all good, Award. Well, no, I mean, the public is split, Shah, if that makes sense. He says my polls are always split. It's not that my polls are split. The public is generally split. That's why we have markets. It's because there's two different sides to everything, 5,000 is generous, sir. Hey, all good, Erebus. I appreciate you not getting weird and kind of laughing back with me, man. It's all good, dude. I appreciate it. Powell's speech, it might be in the title. It also might be in a timer. Just a weatherman. I'm learning Spanish, so aquí. Definitivamente estoy entre los tres primeros, mi amigos. Look at Tesla rip up at 180s, guys. 180s, 179.90s. I definitely didn't look that up right now. I'm definitely not looking that up on Google Translate to act like I know what I'm talking about in Espanol. I'm definitely not doing that right now. I mean, I might be, but I'm just gonna pretend I didn't. Tesla up to 180s right now, guys. 180s. Green, let's go. Hey, Mark is back over the VWAP here. We'll see if it holds. Tesla up to 180s, guys. 180s. Walmart at 149.60s here. Look at Tesla. Hey, 180s right now, man. Again, we're in it. I'm just gonna sit in this right now. The market's rangy, guys. Y'all just be careful. Again, big pop at JP in about 48 minutes here. Yeah, definitely top 3 Spanish speakers in the world. Definitivamente soy los tres mejores hispanohablantes, mi amigos. En todo el mundo. Man, they're hitting me with some big words that are hard to pronounce even if I'm reading them. Hispanohablantes. That's a tough word to say for an English speaker. The other one is definitely, definitivamente. Whew, what a word. Definitely top 3 words ever. Again, SPY at 420. Walmart started to bounce back up a little bit. We'll see if it holds. Tesla at 179s or so. 179 something. Yeah. Yeah. Does another rate hike make the market will go down today? I don't know. I think we're going to rate hike again. And the reason I think we're going to rate hike again. Mira aquí. The reason I think we're going to do another rate hike is because inflation numbers have gotten better. The market has not shown weakness. I think if the market was really weak, all right, and I think if the market was really struggling, like if the SPY was breaking down and testing the lows of the year and really struggling, I think the Fed would be more likely to pause. The reason I don't think he's going to pause is because the market's flying up here. The SPY's at 420s right now. You know, if you look at the SPY over the last year, again, it is from 348s in October all the way to 420. The SPY's green on the year. It's opened up at about 384s now. And so the market's very green over the last year. I think if the market was struggling, if the banks were even struggling a little bit more now after the whole FRC, First Republic stuff, I think the Fed would be a little bit more likely to pause rate hikes to try to give them a break and let them kind of not fail. But because we're showing resiliency all the way around in both the market and banks, I think the Fed is still going to look to combat inflation. I think when we look at like Jerome, we look at the jobless claims report yesterday. You know, jobless claims came in lower than expected. And we also had the Philly Fed index. So manufacturing came in stronger. Jobless claims came in slightly under expectations, which means that like more people were working and manufacturing was stronger than expected. And the market reacted negatively to that. And so I think what that means is that the market's still very much fearing inflation more so than a recession right now. And I think the Fed understands this. Of course, next week, guys, the Fed's preferred inflationary gauge is called the PCE. It's the personal consumption expenditure. All right, that's what the Fed's preferred inflationary metric is. That drops next Friday. So next Friday, we get what's called the core PCE report. That is going to be really indicative of how bad inflation currently is, and that will certainly influence what the Fed decides to do moving forward in the next rate hike decision. Tesla testing highs again. SPY still in the middle range, but Walmart bouncing back. The SPY's bouncing back. Tesla up to that 180 level again. And yeah, we'll see if we get anything good. Yeah. Yeah, mi padre hablas español toda mi vida. Yo no sé mucho porque yo no aprendo. That's the best I can speak. That's me speaking it naturally, but I can't really. I'm sure that's probably pretty broken. Yeah. Hey, baby. Yeah, all right. All right, guys. So yeah, look at the market starting to bounce back here. Tesla testing highs again. Right now, just bounced off of that 180.25 level here. Again, hit that subscribe button. We got almost 700 people here. We got Big Papa Jerome Powell talking in about 45 minutes. 45 minutes. We got Big Papa talking at 11. And again, we'll see what we get. Tesla testing the highs up there. Disney bouncing back a little bit as well. And yeah, we'll see what we get, guys. Love you. All right, sorry, I was talking to my wife. Yeah, I mean, like I said, my dad is very fluent. My dad does like missionary work in like Mexico, and he's traveled to like Costa Rica and like done a bunch of stuff there with his church. And so my dad speaks fluent Spanish. Like all his friends are Latino, you know. And my dad honestly kind of looks, you know, he looks the part too. And so he loves Spanish. He loves Spanish culture and Latino culture, you know. And so he's been trying to get me to learn all my life. So now I'm finally learning. I'm using Babbel. Babbel is what I'm using. I think that's what it's called. Let me see what I'm using. The app. Yeah, Babbel. Babbel is what I'm using to learn. Yeah, Disney was cut earlier though. It wasn't cut today. It was cut, or it wasn't cut like right now. It was cut like a couple hours ago, I think. Maybe earlier this morning. Should I buy Palantir on this drop? I don't know, man. Palantir's up a lot. And so that's it's not really how I trade, but I'm not saying it's not a bad stock to buy. I don't know. Again, it's my general trading strategy is look for extension on the downside and buy up the dip. And so, you know, I waited for Tesla to dip down and bought that up. I waited for Disney to dip down to the low 90s and bought that up. I waited for PayPal to dip down. I'm losing in PayPal, but I bought it up afterwards. And so we're just kind of sitting back. Hey, thank you, Albert. I appreciate that, brother. Thank you, man. Duolingo, got you. Yeah, I like Babbel because it's like games. Like it's like games, so I can like learn. I can answer questions, and I think it's much better. You see, you can speak good at Spanish. Oh, you see, there's a reason you speak good Spanish, is what you said. Okay, gotcha. I knew everything but raison. I didn't know what raison mean. So I'm getting there. I can speak Spanish a lot of the time, but I can't understand because a lot of the time when native speakers speak it, they speak it really, really fast. And so I can speak it myself, but I can't translate it a lot of the time because it's super quick. You know, I'll get there. Again, Tesla flying up, back up to that 180 level. Back up to that 180 level. Thomas. Yeah, Carol's gonna get mad. There's Carol. XAU? What is that? What symbol is that? I'm in Colombia, and they are very hard because they speak fast and don't. If you guys know my crypto partner, the guy that runs the crypto channel with me, his name's Cam. He's from Colombia. So my dad, he came over for Easter, at my dad's house when I was in town, and him and my dad, I kind of warned him. I was like, hey, my dad's only going to speak Spanish with you. He's not going to say a word to you in English, you know, because my dad likes to practice it. And so him and my dad spoke a lot, you know, and kind of hung out a little bit. Speaking of that, we're doing a crypto show much later on today after the JP interview. So we'll be doing that. Hey, thank you, Fazel. I appreciate it, man. Thank you. Hey, thank you, Mike. All right, guys, market's starting to turn up here. Again, look at Tesla. Tesla at 180.20s, 180.20s. SPY at 420.60s. Walmart up there as well, so it's moving. Victor, hola, mi amigo. Yo soy fantastico. E2. I'm getting there, you know. Again, Tesla's still ramping up. We're only holding a small position in Tesla, but banks sound resilient. I don't know if PayPal is going to bounce. I'm in it, and I think there's an argument for the bounce, but I don't know for sure. Again, PayPal, I think the problem, if there is long-term risks in PayPal, what the long-term risks are is crypto is getting pretty efficient. Like for me to send Tether coin to somebody, and I deal with this all the time because I have to pay contractors and stuff, but for me to send money to people, I used to use PayPal all the time, but like there's a lot of red tape that comes with PayPal. The fees are very high, and at this point in time, you can send Tether coin for like $3. I can send 1,000 Tether coin for $3. You know, PayPal, I try to send $1,000, it's gonna be like $50 or some, you know, high fee percentage wise. And so in that regard, I think the biggest risk to PayPal long term is crypto, and I think they know that as well. You know. Hey, what's up, Marcado? He said, hello, I'm new to trading and recently got a few trades starting with very little money, but it's growing. Doing trading is making me so happy. I can't believe my journey is actually starting. That's great, man. I'm not. Okay, listen, we get bots that sound exactly like this in the comment section. And usually the next sentence comes along with, I was really struggling as a trader until I met Deshaun. Now with Deshaun, I'm making $5,327.63.5 every week. Join my Telegram group. So as long as you're not about to say that, it's all love here, bro. I appreciate you being here. You know, so if you're not a bot, which I don't think you are, Mercado, I appreciate you, brother. Thank you, man. Welcome. Good luck on your trading journey here. Again, I don't claim to be an expert. The channel's called Beginner Trading because, okay, you're real. Okay, got you, Mercado. All good then, brother. All good, man. But yeah, if anybody, y'all know exactly, anybody that's seen them knows exactly what I'm talking about. You know, they'll give you like a really specific number to make it seem more credible, I guess. Like I earned 5,692.5 using Kate the Trader. She is just great. Join our Telegram group. You know, what they'll try to convince you to do is they'll try to convince you into sending them crypto. They'll be like, yeah, send me crypto. I'll earn you 100% in a week or whatever they'll say. You'll never see it again. They'll change the name. They'll delete the account. You'll never see them again. All right, guys. Hey, we have 35 minutes here. 35 minutes, team. Tesla making moves up to 180.50s. Yeah, they're definitely scammers. I think most of the time, Bitcoin and the S&P 500 trend with each other, Arif. With the exception of banks. You know, banks and crypto generally have an inverse correlation because as people move money in and out of banks, crypto is inversely affected by it because like skepticism in banking makes people optimistic in crypto and vice versa. So I think that's the correlation I've seen lately, but it varies for sure. Yeah, speech is in about 35 minutes. Yeah, definitely top 3. Well, Powell's not going to pause today. Today's not the rate hike decision. Today, Powell's doing a conversation with Ben Bernanke, who was he's the old Fed chairman. So like Powell is the new Fed chairman. He's been it for years. Bernanke was the old one that was the chairman during the 2007 and 2008 financial crisis. And so there's going to be a lot of interesting things. Look at Tesla fly up here, though, guys. I'm going to make this a little bit larger. Tesla is ripping up. Tesla up to 180s right now. I was watching a cat video until I found this channel. Now I'm rich. I mean, you're probably not rich in money after finding us, but you're going to be rich in, love, good luck with your cat videos, though. Yeah, that's possible, D. Yeah, it's certainly possible. What are you doing right now? I've been trading all day. I'm down a little bit on the day, but we've had a pretty good week. I could show you guys my P&L this week. So we're down a little bit today, but it's not a big day. So far this week, we are... Hold on. So far this week, we are up about 350 on the day. On the week, 350. We've had a pretty good win-loss ratio, too. Our win-loss ratio is 23-1. I'll take it. Knock on wood. I'm going to keep that up. Trading futures. Yeah, we're trading futures mostly. It varies, though. Walmart rejecting a little bit. Tesla is what's dragging the market up right now, though. So, Tesla is very strong. SPY is still pretty neutral, but it's at the top of the range of the day here. So, you can kind of see the SPY up here on the right. You can see the top of the range here in futures. Tesla up to 181s here, man. Hey, we'll take it. I'm going to take a little piece of this off. Again, we're already mostly... we're going to take a little bit more off there. So we just locked in some more on Tesla here because we can. It's just up so much, man, that, I got to lock in some profit, I think, sometimes. Gold's also doing pretty well today, too, believe it or not. PayPal's back up some, too. I mean, it's still red in PayPal, but I'm going to give it time. Buy a little bit here too. Look at Tesla back up to 181s here. Market's just so sideways. We long and are shorting. We're in middle range right now, so I don't know. I'm long right now because we're over the VWAP and we're over the middle range slightly, and we're testing the top of the range. And so in that regard, I'm kind of looking to short a little bit more, but I have no idea what we're gonna do, and we might just kind of flush down. I really don't know. 2 contracts right now. We'll look to kind of scale into it down to this level here, I think, and then if it breaks under that, we'll just cut it. We might not even have the opportunity to scale in if it keeps pumping up. Okay, there's a little pullback here. Oh, no, back up to flat. Yeah, Tesla's just been ramping. What is Google doing here too? Google up to 124.60s. Yeah, we're streaming the Jerome talk for sure, and in its entirety. We're gonna stream the whole thing for sure. All right, so now we're green on this again. SPY's testing the top of the range, so that's good, but it's retracing pretty quickly too. But Tesla just hit 182.20s or 181.20s. Surge. Google finally pulling back some now, but I'm gonna cut this and I'm gonna wait. We got a lot of choppy action. If you look at the market here too, guys, you can kind of see how choppy it is right now. Look, here's the SPY. Here is Walmart. And then here is Tesla at the very bottom, just kind of ripping up big. I don't know if I'm going to buy more Disney. I think I'm just going to sit tight there.
Look at Tesla, man. Wow, dude. Tesla, so strong, man. It's crazy how strong this is right now. All right, guys. Yeah, so still at the top of the range. It might have worked if I stayed in it, but it's all good. SPY pulling back here. Tesla's still surging up though right now, man. It's kind of crazy how much this is up. Tesla finally hit 182s and now it's finally pulling back some here. Look at the right. Again, 27 minutes, guys, until the speech comes out. What's Disney doing? Watching Apple here too. Yeah, I'm gonna put Disney up on the top here. Yeah, I could have held that one too, I think, but it's all good. We're so rangy. I mean, we could argue that it's gonna break the top of the range here, but back to the top of the range. Again, Big Papa speaks in about 25 minutes, guys, so y'all be ready. Tesla finally pulling back here. No, he's gonna speak right here. We're gonna stream it right here. We'll stream the full thing live. So guys, you can watch the full Powell speech. Again, it might say it right underneath me, and there might also be a timer right here. And underneath the timer, it could say exactly when he's going to speak and where he's going to speak. It could say it right. I'm not saying it does for sure, but it could. And so, again, Tesla pulling back a little bit. We're starting to test the top of the range. This is a 1 minute chart. We're just looking at the shortest time frame possible to show you guys the price action. All right, we'll put it on both. All right, testing the top of the range. SPY just broke over that 420.70 level. And again, we got about 24 minutes here, team. 24 minutes. Again, one of my other sponsors is a company called Chart Prime, right? And what Chart Prime does really well is Chart Prime gets custom alert signals. And it's kind of like having your custom VWAP, but these also give you like alert signals. They give you candlestick patterns. They show you reversal potentials. And honestly, they're really, really powerful. Like if you look at Chart Prime here, right, here's just the 5-minute chart from the recent days. My favorite's the 5-minute chart. And you can kind of see why. So like number one, if you look at this, Chart Prime literally called the top on these two moves. Look, possible reversal down, drop, possible reversal down, drop. And you can kind of see they have their own custom VWAP, which is powerful. I like it more than the regular VWAP too. And I have 4 monitors, so sometimes I'll use these off stream. But like, look at yesterday's price action. I can't fake this. And again, they're a sponsor of mine, so I'm certainly biased. But like, look at this. Possible reversal up, huge bounce. Possible reversal down, nice little drop. Literally called the bottom here. Possible reversal up, huge bounce. This one was wrong. But like, again, this is a 5-minute chart. You can use them on a 1-minute, a 5-minute. You can use them on stocks, crypto, Forex, futures. Look at this one. Reversal down, you get drops all the way until the next one, and then you get a bounce. Look at this. Reversal down, drop. Reversal up, bounce. Reversal down, drop. Reversal down, drop. And you can kind of see when you find multiple that show up together at once, it can be even better. Like, look at this. Nice little drop afterwards. I like using them on like a longer term time frame as well, like a 1-hour chart. Here's a 1-hour chart, and they're really good at like finding the tops and bottoms of stuff too. Like they do that really, really well. Like, look, possible reversal down, drop. Look at the bottom. So these are hourly charts, right? Possible reversal up. Look at the bounces you get over like an entire day. And so they can be powerful. I can't guarantee you're going to make money, but it's $35 a month. And so it's pretty cheap for Chart Prime. You know, it's not like super expensive, and you can use it in stocks, crypto, Forex, futures on TradingView. Really, really cool, you know, sponsor of mine. I only have 2 sponsors, and I try to make sure they're all like useful, if that makes sense. So again, you can check out the link right there. Also, guys, before the draw, look at the market turn. Wow. So the market is starting to turn down here. So market's starting to turn. Yeah, and if you want to check out Chart Prime, you get 40% off at the link in the description, or the link right there in chat. But the market's turning down here. Net short. I don't know much about Net as a stock. Do you guys like it? Again, I don't really know much about that one. It's up a lot though over the last few days. This is Cloudflare. Yeah, it's just not really. I don't like software stocks that much, but everybody's different, you know. What's up, Tobias? I don't know. I don't think Powell wants to necessarily say negative things. I think sometimes he's positive, sometimes he's negative, but I think he just tries to. All right, so bouncing back up, but the market's been a complete sideways mess today. So y'all just be careful. Market's pretty flat. Papa Powell is on his couch having a nah, man. Again, Powell's got a tough job, bro. I've said this for years, but like Powell doesn't really make that much as salary. He gets paid about $200,000, you know, which I'm not saying is not a lot, but like it's in the ballpark of what I make running this YouTube channel. And so for the amount of heat that he gets, I don't know if I'd want that job. I mean, I'm lying. I'd probably take that job in a heartbeat. If they were like, hey, John from Beginner Trading, do you want to be the next Fed chairman? I'd say yes. Of course I would. Because I think there's a lot of other perks that you get from having that job. But Powell's got a tough job. And the reason it's tough is because no matter what, people are going to blame him. They're not gonna compliment him if he does, if the market does well, but they're gonna blame him if everything goes wrong. And it's not just him. Like, he's the Fed leader, but he is not the only guy making those decisions. And so, tough job. Oh yeah, he's doing all right. Like I said, I'd take the job in a heartbeat, but everybody just hates him. You know, tough job. Yeah, which is right, probably where he should be right now, Kevin. I'm using a platform called Quant Tower. No, they're not raising rates today. This isn't the rate hike ceremony or decision. This is just an interview with Ben Bernanke, which is the old Fed chairman prior to Powell. So Bernanke was the Fed chair during the financial crash of 2007 and 8. So Bernanke was basically the Fed chairman during that time. So it's kind of like the old Fed chairman interviewing the new one. Yeah, for sure. No, today's not the rate hike decision, guys. The rate hike decision always, again, to give you some perspective, we cover every rate hike decision here. The rate hike decision always happens at 2 p.m. Eastern Standard Time, and the press conference always happens at 2:30. Today is certainly not that. Today is just Powell getting interviewed. Yeah. Will he be hawkish or dovish? Let me know. We did a Twitter poll. Let's see what people said. We did a poll. We got some votes. It looks like most people are hawkish. 46% of people are hawkish. 41% are neutral. 14% are dovish. Yeah, for sure, Milton. It's gonna be at 11. There might be a timer right underneath my. There might be a timer right here. It could be. Might be. Possible there is. Yeah, so what it will be relevant to in regards to rate hike decisions is he might say some foresight into what they might do. Some of his comments might foreshadow the decision that they make. The next rate hike decision, I believe, is going to be June 14th, if I remember correctly. So the next rate hike decision is going to be June 14th. That is a big decision for them, you know. So. Well, yeah, he doesn't really stutter. I mean, he does pretty good considering the immense stress that job entails. You know what I mean? All right, we got 15 minutes, guys. 15 minutes. Yeah, that week is going to be really interesting. So it's not for a few weeks. So not until 3 weeks from now, we have the biggest week of the market activity that we've had in a long time. And what's going to entail, what that's going to entail is we're going to have CPI, we're going to have the Fed rate hike decision, and we're also going to have earnings that all happen on 1 week. So CPI, PPI, Fed rate hike decision, and earnings all happen that week. That's going to be the week of June 12th through the 16th. Again, CPI, I think, is on the 13th. The rate hike decision is on the 14th. And then we've got earnings all throughout that week. And so there's a lot of stuff going down that week. That's going to be a really volatile week for market activity, too. We're starting to break down here. But yeah, going to be a volatile week for sure. All right, so yeah, Powell speaks at 11 a.m. Eastern Standard Time. Do you think his comments will help or hurt the market? Hawkish or dovish sentiment? Let us know in chat and subscribe. Tesla's still finally pulling back. It's been on a nice little run, though, man, to be honest. Big run. Yeah, I mean, I don't know what the market's going to go do, that, guys. Yeah, I don't know what the market's going to do. But what I will say is that every single Powell speech, every single rate hike decision, we generally get a lot of bears that come here and say it's the end of the world. It's doom and gloom. It's, you know, it's the story of Independence Day that's starting right after Jerome Powell speaks. It's the end of the world, they say, and the market's going to crash. Somebody told me that the SPY was going to go to 80, you know, not too long ago. Generally, I see it every time. I'm not even saying I disagree, but I see it every time. So after hearing it over and over and over again and watching the market just kind of go up, you start to get skeptical. And so I'm not saying Powell's going to tank the market. He could. He certainly could. But that's not generally what we get. And a lot of the time the market reacts positively. But again, a lot of the time it's neutral as well. And then sometimes we do drop. And so we don't really know what we're going to get here. So just be careful, guys, because nobody really knows what we're going to get in this situation. You know, nobody knows what he's going to say. Nobody knows what he's going to do. Yeah, he'll generally give you mixed sentiment. Again, we're getting ready to stream it right now. We got about 12 minutes. It's starting pretty soon. Again, we're going to stream the full thing live here. Yeah, if the SPY hits 80, bro, I'm buying the farm on that SPY trade, dude. But yeah, basically somebody said that the SPY would drop. This was back when the SPY was at like 400s. But right now the SPY is at what, 420s? Let's just say 420. Right now, if the SPY drops, you know, 80%, it's going to be $84 on the SPY. It's just incredibly unlikely. Incredibly unlikely. Yeah, I know today's the biggest option day. Greatest comment today. The greatest comment is the Huffy comment, you know. If everybody remembers the Huffy bikes. I always remember the bike to have growing up was a Mongoose, I think is what it was, man. I always remember, I grew up in the 90s and early 2000s, and so like BMX was like the thing back then. I was terrible at it, but like I definitely wanted a BMX bike. So yeah, please stop spamming, man. Did somebody put him in timeout yet, or do I need to? Okay, there we go. Yeah, stop saying the same thing over and over again. It's not useful. Yeah, honestly, sheep being led to the slaughter. I've heard it so much, man. Again, I understand my like how it really is. Okay, so like the same people say the market was going to crash have been saying it since 348s, and a lot of times they're following YouTubers that are telling them this stuff. They're following YouTubers that are like, yeah, the market's going to crash, because that's how they get the most clicks. But we certainly haven't crashed. And again, I like Michael Burry, but I think Michael Burry's been wrong a lot too. You know, Michael Burry predicted the 2008 crash, did a great job, but he's also predicted a bunch of other crashes that never happened. And so like hanging on every word he says is usually going to be a rough thing. Now, maybe we do eventually crash, but even if we do now, again, Burry's probably running about 20% accuracy in the last 15 years. So maybe, but I'm skeptical. Tesla finally breaking down, and the market's been really resilient and strong, and maybe we don't hit the recession that the Fed thinks we are. Again, this interview will be interesting in telling that. I think the problem is that the biggest long-term edge is that the market's going to go up generally long-term in terms of the S&P 500. Now, individual stocks might fail, but like generally the biggest edge you'll ever get in stock market terms is that the S&P 500 is going to give you between 6 and 12% a year. And that's including crash statistics too. So that includes like crash numbers, still 6 to 12%. And so what does that really mean? That means on an average year when the market is not crashing, the SPY is going to give you more than that. You know, on an average year, that means the SPY is going to give you 15 to 20% a year. And so thinking that we're always going to crash is just letting a lot of people miss out on long-term edge, which is statistically proven for the last century. Warren Buffett value investing is the single most effective form of trading and investing there is in the world. And a lot of people miss out on it because, you know, their YouTubers are telling them the market's going to crash every day. And maybe we do crash. I'm not saying we don't, but we certainly haven't yet. And if anything, the market's been pretty strong. And I also think like the market's down a lot over the last few years. Like it's not like the market's just breaking highs. The SPY has been down for over a year plus now, relative to the highs in 2022. And so we're not anywhere close to the highs. So it's not like we're just super extended on a long-term chart, at least. Maybe on a shorter-term chart, we could, you know, I see some extension. But I would be skeptical of both sides that are really pushing one narrative because nobody knows. And all we can do is just react, I think, is my way to do it. All right, guys, get ready. All right, you guys ready? Market's starting to push back up a little bit. Again, we got 6 minutes, guys. 6 minutes. Again, I am going to throw it in sub-only mode. So we are going to throw it in sub-only mode. So listen, if you haven't already, subscribe, guys. We do this live every day. We cover all the big stuff. We don't sell a course. We don't act like experts. I don't try to say I'm guru. I always tell people I don't know. Sometimes to, you know, worse reactions. But I try to just genuinely be honest with people. And so... all right, guys, get ready. We'll see what we get. I still move it up. Tesla bouncing right at the VWAP here. So we do have a bounce at the VWAP for Tesla. SPY still surging up a little bit, but not a huge run or anything like that. We're still in a very sideways neutral range. All right, guys. So yeah, we are ready here. We got the conference ready. me try to set this up to where it's the best we can. I will put this up in the corner, try to put the market itself up on the left, get this out the way. So if I do trade, maybe leave this up on the bottom here with a couple like Tesla, maybe the Dixie here, the dollar index. We'll put the Q up instead, and maybe the dollar index, maybe Bitcoin up. Put the Dixie here, and then we'll put this up down here, and then we'll put the meeting here. Let's see if we can make it bigger. There we go. All right. It's pretty good, I think. Or maybe we'll put this up at the top. Make sure you guys can see all of it. There we go. How's that? Is that good? Let me see what it looks like. No, we got to get this word out of here. Yeah. All right, we're going to have to swap sides. There we go. It's much better. Make sure we are live there. All right, guys. 11 o'clock. So we got 2.5 minutes here. There we go. All right, guys, get ready. Again, hit the subscribe button, hit the notification bell. Conference is going to start. Perspectives on Monetary Policy is what it's titled. And, yeah. Stream this across the bottom. Timer here on the top left. We are ready here, team. We are ready. Again, we cover all the major stuff here, so subscribe if you haven't yet. We appreciate it. Again, we got the S&P 500 here on the left. That's what this is. So this is the S&P 500 on the left. I'm also going to mute the music. Turn the music off. Y'all can hear the music prior to this, correct? You should be able to. I'm gonna mute it here. I think they muted it here as well. Sound is up. Okay, no, so the music's still playing there. All right, so we are ready here, guys, for Powell, Big Papa. Tesla pulling back a little bit. Got about 3,000 people here. There he is. All right. Sound check. You should be good. We should be good.
Top.
Big Papa. The man.
Okay, water. All right, I guess we can get started. Thank you all for being here. Of course, it is a true honor. Chair Powell and former chair and Nobel laureate Ben Bernanke with us today. Thank you very much for being here. I've very much been looking forward to this conversation. I'm sure our audience has too. So let's just get to it. This conference, as everyone knows, is dedicated to the memory of Thomas Laubach. And earlier this morning, we heard some personal reflections on working with Thomas from Secretary Janet Yellen, also former chair of the Fed, and from President John Williams. And both of you worked closely with Tomas as well. So I'd like to give you both an opportunity to share your own thoughts about Thomas's contributions as an economist, as a central banker, as a colleague. Ben, maybe we could start with you.
Sure, and it's great to be here. I was Tomas's thesis advisor. At the Fed when I was
Sorry, I
doing
had to
Jay's
update
job,
my mic
I
to a
don't
better
have
mic, and I
any
didn't want it to
short
interrupt
little
anything
anecdotes
like
to give,
super
but I do want
important.
to say
So
that I think there are sort
we
of
are
two
back.
kinds
No
of
more interruptions.
accomplishments a person can have. They can have curriculum vitae accomplishments, and they can have what I call eulogy accomplishments. Curriculum vitae accomplishments are things like published papers and promotions and awards and recognition. Eulogy accomplishments are the things your family remembers. You know, your kindness, your support, helping other people, and so on. Tomas was one of the few people who scored high on both dimensions. On the CV side, beginning with his work with me, he had a tremendous input into the Federal Reserve's framework, working on inflation targeting, working on the more recent Fed framework. He did work, I'm sure John Williams talked about his work with Tomas on the natural rate. He worked on the effects of deficits on interest rates, again, another contribution. So a person who made a lot of intellectual contributions at important points. But as a person, he was just a very warm, kind, friendly, helpful person, and he was just a joy to work with. And I'm glad to be here to say this about him.
Thank you. Jay?
Thank you, Trevor. So first of all, let me say this conference is a very fitting tribute to Tomas, and I'm really delighted and honored to be part of it. And let me add my thanks to those of us who made all this happen here today. So I first met Tomas when I joined the board as a governor in May 2012, almost exactly 11 years ago. And in preparing to join the board, and then in the early years at the board, I was very focused on developing, a deeper background in macroeconomics and monetary policy. Many people here at the board supported me in that process, too many to name here, but I will say Tomas really stood out. And it was during the process of reading, the literature and discussing it that I really started to get to know him. He had this great ability to communicate complicated ideas. He obviously loved talking about economics, and his great enthusiasm and willingness to engage with me, a new governor, was immediately evident. He was very gracious to me, and we had a lot of informative discussions. So rather than being his teacher, I was really his student in those early years. As you know, by the time, as you noted, Trevor, by the time I became chair in 2018, Tomas was the head of the Division of Monetary Affairs. And in that role, he was a trusted advisor to me and to the FOMC. His leadership was particularly important as the FOMC conducted our first ever public monetary policy review. He played a major role in organizing that, identifying key topics, and organizing the staff all through the Federal Reserve System. He also played an absolutely essential role during the critical period of the pandemic at the very beginning, when we were marshaling our forces and our tools to stabilize the financial system and protect the economy from even more dire consequences. And through it all, he did come through as, not just for his dedication, his great intellect, and his mastery of monetary economics, but also just for his kindness as a human being, and just as in being a terrific, great colleague and a great person.
Thank you. I think there's a lot of agreement for the sentiments that both of you have expressed. Appreciate that. Before we get to some questions on some current issues, I did want to ask you both about any formative experiences that you may have had that have shaped your views, particularly about your thinking about monetary policy. Paul Volcker, in his oral history interview, tells the story of his mother, who was adamant that he received the same dollar value monthly allowance when he was in college that his older sisters did 10 years prior. And of course, he was not too happy about that, because inflation in the interim obviously eroded the real purchasing power of that allowance. So as the story goes, that was the beginning of his personal commitment to price stability. So Jay, do you have any such stories to tell?
Maybe not quite that on point, but so I graduated from college in 1975 during what we now call the Great Inflation, and same college year as Ben. And I started working as a lawyer in the financial sector in the late 1970s. I recall from that time a growing sense that high inflation was essentially a permanent part of the landscape, just something that we all had to accept and deal with, and that the costs of getting rid of it were too high. So you just were getting used to it. Of course, ultimately, the Fed did step up and restore price stability. And one lesson from that era is that price stability is really the foundation of a strong economy, and that the economy doesn't work for anyone without price stability. Another is that high inflation when we have high inflation, it is the responsibility and the obligation of the central bank to restore and sustain price stability. So today, while inflation isn't as high as it was when I was in college, it's nonetheless far above our 2% objective. And many people are currently experiencing high inflation for the first time in their lives. It's not a headline to say that they really don't like it. So we are very aware that high inflation imposes significant hardship as it reduces purchasing power, especially for those who are at the margins of the economy and living paycheck to paycheck and need to use all of their incoming income to pay for food, housing, and transportation and other essentials. And that's why the committee is so strongly committed to returning to our 2% goal. We think that failure to get inflation down would not only prolong the pain, but also increase ultimately the social costs of getting back to price stability, causing even greater harm to families and businesses. And we aim to avoid that by remaining steadfast in pursuit of our goals.
Thank you. Dan.
Well, I had mentors, Dale Jorgensen at Harvard and Stanley Fisher at MIT in particular, but I'm going to tell you about something that happened to me when I was 6 years old. I used to visit my grandparents in Charlotte, North Carolina during the summer, and I would sit on the front porch of their house and listen to my grandmother tell stories about her life. And she told about how she raised her family in Connecticut in the 1930s during the Great Depression. And it was a town that was specializing in shoe manufacture. And during the Depression, a lot of the factories were shut down. And she told me that, it was a very hard time. A lot of the kids went to school in tattered shoes or maybe no shoes at all. And I said, Grandma, why would they do that? And she said, well, because their fathers lost their jobs. Why did they lose their jobs? Because the shoe factory shut down. Now, I was only 6 years old, but I could see the problem with that argument. I said, well, why didn't they just open the shoe factories and make shoes for the children? And she said, it doesn't work that way. But I think it really was a puzzle to me that you had the same productive capacity in 1933 that you had in 1928. And in 1928, people were dancing to Charleston. In 1933, they were in bread lines. And that really impressed on me, that economics can make a really big difference in people's lives. And monetary policy is like that. I mean, it's, as Jay, of course, and all of you well know, that the decisions made in this building have a very broad and real effect on people's lives. And for that reason, besides its intellectual fascination, it's worth studying and understanding.
Yeah. Thank you. I know that's certainly a key motivation for many people in this room to be working so hard. Okay, let's now turn to some topics of more current interest. And I'd like to start with the nexus between the financial system and the macroeconomy.
This is important.
Both of you, during your 10 years as chair, have faced very significant historic financial crises. Ben, obviously you confronted the global financial crisis, and Jay, the global pandemic. Those episodes were clearly acute, very vivid examples of the connections between the macroeconomy and the financial system, as well as, I think, a good illustration of the role of central banks in such episodes. But Ben, your research, importantly, and the research that you have inspired, has really demonstrated that understanding the connections between the financial sector, credit markets, and banks and the real economy is critical for even understanding traditional business cycles. So with that as background, we have just experienced a period of stress in certain parts of the banking system here in the United States. So I want to get your take on those developments, how you think they match up compared to some previous episodes, and what they might mean for the economy.
Well, in some dimension, the recent crisis has followed the standard sequence. I don't know anything about Silicon Valley Bank other than what I read in the paper, so please don't misinterpret this. But it was a classic situation where they had assets that were subject to risk. In particular, as interest rates rose, the value of their long-term assets fell and their capital fell. They had hoped to hedge that by their deposit franchise, where as interest rates rose and interest rates moved more slowly on deposits, that would partially compensate, but they were dealing with customers who were very social media savvy, and that didn't really work. So after the decline in capital, you had the second stage, which is runs, people taking out their money, which ultimately led to the collapse of the bank, despite, I may add, the good efforts of the Fed and the FDIC to provide liquidity and provide support for depositors. The third stage of a banking crisis is contagion, and people looked at other banks and said, oh, they look sort of vaguely like Silicon Valley Bank. They got the same number of letters in their name and all kinds of things like that, and that caused people to begin to remove, deposits elsewhere. And finally, the reason this is important is that it ultimately affects credit conditions. And the Federal Reserve is, of course, looking at the effects of bank problems and other financial issues on the extension of credit and therefore on the real economy. So, in that respect, I think it's very similar to other crises. I think it's different from the global financial crisis in many ways, including its scale and scope, of course. But I would mention a couple of things, a couple of important differences. One is that the impaired asset in this case was U.S. Treasuries, which are very different asset in kind from subprime mortgages, in that U.S. Treasuries can always be valued accurately, and so there's not the uncertainty that was associated with subprime mortgages. And secondly, as the economy declines, if it does decline, U.S. Treasuries actually become more valuable rather than less valuable, and so there's kind of a counter-cyclical effect. So that's one very important difference, I think. And then the other worth mentioning, but very important, is that relative to, say, the GFC or the Great Depression, overall, borrowers are in much better shape, than they were in these previous episodes. And that makes a big difference, both in terms of the stability of the banks and also in terms of the impact on consumer spending and the economy in general.
Well, I guess a major reason that situation didn't get worse, and I think the contagion was very much contained, were the forceful actions, Jay, that you and the Federal Reserve took through the use of your liquidity tools, including the creation of the Bank Term Funding Program. However, in deploying these liquidity tools, that has come at, against this backdrop where the preeminent monetary policy concern is high inflation. And that's, of course, a little different from some of the earlier episodes, and has raised renewed discussions about the so-called separation principle, right? And so I wanted to ask you how you think about the use of financial stability tools and liquidity tools as opposed to more traditional monetary policy tools and how they fit together.
It's an interesting question, but I want to start by saying, though, that the overall, the banks and the banking system are strong and resilient and well-positioned to deal with the challenges they may face now or in the future. So as you pointed out, we do have separate tools, monetary policy to achieve our macroeconomic objectives, liquidity, supervisory, and regulatory tools to address financial stability issues. But I see an important distinction between separation, this is the separation principle, separation and independence. Our tools can have separate objectives, but their effects are often not entirely independent. So the tools are complementary almost all of the time because financial and macroeconomic stability are so deeply intertwined. In fact, our consensus statement notes that sustainably achieving maximum employment and price stability depends on a stable financial system. So because they're so intertwined, to me, there is not likely to be an absolute and complete separation of the tools, nor is that possible or desirable. And I think as Ben's research and the global financial crisis demonstrated, financial stability affects macroeconomic stability and vice versa. We saw that clearly at the outset of the pandemic. As a result, the tools that we use to address concerns in either arena can and will affect both, especially during extreme circumstances. That said, yes, the tools are separate. They have individual purposes, and most of the time, each can be used for its intended purpose without compromising the other. For example, as you pointed out, when banking stresses emerged in early March, we used our liquidity tools, discount window, and the Bank Term Funding Program to make liquidity available to banks that might need it. And that liquidity supported the stability of the financial system without restricting the use of our monetary policy tools to promote price stability. While the financial stability tools help to calm conditions in the banking sector, developments there, on the other hand, are contributing to tighter credit conditions and are likely to weigh on economic growth, hiring, and inflation. So as a result, our policy rate may not need to rise as much as it would have otherwise to achieve our goals. Of course, the extent of that is highly uncertain. So,
yeah, thank you. And of course, I think the effectiveness of those tools is reflected in the fact that the FOMC has actually raised interest rates twice since the emergence of the banking strains. Of course, then the purpose of that is to confront the inflation issue, which brings us to our next topic, which is in fact inflation. In the pandemic and the aftermath, we've had many renewed discussions of the important and classic textbook distinction between supply shocks and demand shocks, and in particular, the particular challenges that a supply shock can present to a central bank. And that's also raised a lot of questions in academia and in policy circles as to whether or not the inflation process post-pandemic is going to look quite different than prior. Jay, maybe we can start with you. A number of folks have argued that we are entering a new period where supply shocks will be more frequent. Would love to hear your views on whether you think that's a possibility and what that might mean for central banks.
So it's a great question, and it's one I think we'll be dealing with for quite a long time. And I'd say it's certainly possible that we'll see continued supply shocks. I also think it's just very hard to forecast that with any confidence. As Yogi Berra is thought to have said, Ben, you're the baseball expert. You can confirm or deny this, but it is difficult to make predictions, especially about the future. So I think that the best we can do at this stage is probably to just identify the factors that we think can lead to further negative supply shocks. I will say that, though, that positive supply shocks related to globalization largely probably contributed significantly to the period of low inflation that either ended or was interrupted by the onset of the pandemic. And I'm thinking there of the vast increase in global labor supply, the development of efficient global supply chains, facilitated by technological advances and things like that. And I would say those positive supply shocks do not seem likely to be repeated. At the same time, the drivers of the current inflationary surge certainly included a sequence of large negative supply shocks to the global supply chain for goods, which also experienced a large and persistent shift in demand from services to goods, and also the supply of workers. On top of that, Russia's war against Ukraine brought further shocks to global supply chains, particularly supplies of energy and non-energy commodities. So we can't know how persistent those shocks will be or whether further negative supply shocks will come along. Will globalization be partially or fully halted or reversed? Will it resume again as the pandemic mercifully recedes into memory? We can't really know that now. But for policymakers, the bottom line is that central banks will continue to be responsible for providing price stability, and that will require us to navigate whatever additional supply shocks do occur. So as Tomas and Ben and their co-authors wrote in the inflation targeting book, what a central bank can do is control inflation. And that is true over time, even in the presence of supply shocks, should they come.
Ben, I'd love to hear your views on this.
So unusual events which disrupt normal economic functioning often are followed by inflation. Examples are World War I, World War II, the Korean War, and now the pandemic. And the pandemic just makes it harder for policymakers to understand what's happening and to react appropriately. And in particular, the pandemic scrambled the labor market, made it harder to judge the state of the labor market. The opening led to a very extended rise in commodity prices, which was difficult to deal with. We had supply chain issues, which was pretty much a new thing, which was also a contributor to inflation. So there are many features of the pandemic that made this an unusual episode and a difficult episode to address. That being said, I think that, and I've done some research on this with Olivier Blanchard that we're presenting next week. The basic mechanisms, I think, are still the same. But you have a bunch of bad shocks, that's going to give you a problem. But the underlying mechanisms of supply shocks and tight labor markets and so on are really the same. So I think, I don't think there's been a major change in the underlying process that generates inflation, only a series of shocks related to the pandemic that gave us this episode. Going forward, I agree with Jay that we can't predict, what new shocks will come. We've got new technologies out there that might, make big changes in our economy. We've got, green
Fed
investment,
now.
things like that might affect the price and availability of fossil fuels. And so there are many, many things that we can't predict. But I think that broadly speaking, that the inflation process has not changed. And it's one aspect of that, which is very good news, is that the Federal Reserve's credibility has helped keep inflation expectations, particularly longer term inflation expectations, reasonably well anchored, which is always sort of the first step in getting control of inflation.
You mentioned the role of the labor market tightness in the inflation process. I think it's quite striking that right on the eve of the pandemic, the unemployment rate was around 3.5%, a 5-decade low. Yet at the same time, inflation was kind of struggling to get up to 2% on a sustained basis. Here we are in 2023. The unemployment rate is roughly at the same level as it was prior to the pandemic. But of course, inflation is far above 2%. So in that context, should we be thinking about the relationship between slack in the labor market and inflation differently? Do we not have the right measures of slack? Is it problems with understanding what the natural rate of unemployment is? Or is slack really not the key to understanding inflation in the first place? Dan, you want to take that one first?
As I was talking about before, I think that the pandemic, to some extent, scrambled the usual signals from the labor market. And the Federal Reserve over time has begun to put more weight on things like the vacancy to unemployment ratio, which seems to give a better signal in a period of change when the labor market matching process is in change than the unemployment rate. So there has been some scrambling of those signals. That being said, it's simply not true that, even in people who've understood since the 70s, that there's not a simple inverse relationship between inflation and unemployment. In particular, what can break that relationship is supply shocks. And so during the 70s, we didn't particularly have tight labor markets most of the time. We had high inflation, because we had oil price shocks, which the Fed did not respond to adequately. B, because inflation expectations were not well anchored. And there was a strong tendency for price increases to feed into wage increases, to feed into price increases. So because of the presence of supply shocks and inflation expectations dynamics, there's no reason why low unemployment and high inflation can't coexist. But the remedies might be, depending on the situation, might be somewhat different.
Jay, how are you thinking about that?
So I'm very much in agreement with that. It's certainly true that we had both before and after the pandemic unemployment very low, close to 3.5%, but that we only had high inflation after the pandemic. Does that mean that our understanding of the relationship between slack and inflation is badly wrong, or that it has changed fundamentally after the pandemic? And my answer would be tentatively no to both of those questions. I think what really is different this time was the series of unexpected and persistent supply shocks that featured in the inflation process. I don't think labor market slack was a particularly important feature of inflation when it first spiked in spring of 2021. By contrast, I do think that labor market slack is likely to be an increasingly important factor in inflation going forward. In particular, inflation in non-housing services is showing signs of real persistence. In this highly diverse sector, labor costs are a high proportion of total costs, and that sector happens to account for more than half of the core PCE index. But all of this, the point is, all of this can be explained, I think, using our standard framework for understanding labor market slack. you could say it this way, that the natural rate of employment probably rose sharply as the pandemic severely disrupted the labor market. And the implication of that would be that an unemployment rate of, say, 4% indicated a much tighter labor market in 2021 than it did in 2018. And as Ben mentioned, of course, after the pandemic, we began looking at much more closely at alternative measures, particularly vacancies, but also quits, which have been signaling even greater tightness than the unemployment rate alone might have thought to signal. I mean, to put some numbers on it, we at the end of 2018 and the end of 2021, we had 4% roughly unemployment in both cases. In 2018, the vacancies to unemployment ratio was 1-to-1 essentially. In 2021, it was 2-to-1. And that was a much better indicator, obviously, at that time of the simple standalone unemployment rate. Although, as I mentioned, you could also think of it as the natural rate being highly elevated. The other thing is, it may also be the case that the Phillips curve has steepened, meaning that inflation has returned, at least for now, to being more responsive to changes in the labor market slack. But the Phillips curve was once thought to be fairly steep after flattening. Relationships in the economy, like the Phillips curve, evolve over time. So I would not characterize that as a problem for our understanding of inflation.
Very good, thank you. Maybe we can pivot here to the topic of central bank communications. It's widely understood now that the better the public understands the conduct of monetary policy, the more effective it will be. But fostering that type of understanding really requires a lot of communications. And of course, that can be hard. Both of you have been powerful advocates for advancing monetary policy communications, both with an eye toward making policy more effective, but also for the purposes of promoting transparency and accountability. Ben, you've obviously played a critical role here, advancing the FOMC's communications, including the introduction of press conferences after FOMC meetings, the introduction of the summary of economic projections. So what changes over this period since the communication, say, revolution began, would you highlight as being some of the most effective, most important, and where do some remaining challenges exist?
Well, let me talk about communication, because I think you need to understand that it serves multiple purposes. I mean, one of its purposes, the narrow purpose, is to try to align market expectations with the Fed's own thinking. I think that goes back to Alan Greenspan. If you go back to 1994, the first FOMC statement. I mean, since then, the Fed has tried at least to give some indication of what it's thinking and what it sees as the risks to the economy. But beyond that, you mentioned transparency and accountability. This is a powerful institution. It's very important that it be accountable to the Congress and to the public. And best way to do that is explain what we think, what we're doing, and how we're going to go about that. There's other reasons for communication. One I would talk about is feedback. We're having a conference here. If the Fed puts out the issues that it's concerned about, economists will write articles or tweet and respond to that. Or in the case of the Fed Listens program, maybe it would be more ordinary people who are explaining, how monetary policy affects them. One final thing I would mention is diversity of views. Because the Fed has a consensus culture, and there are very few dissents normally, the outside perception is the Fed is subject to groupthink, which of course is possible, but with people talking about, their own views and explaining why they see the economy as they do, it does, I think, at least to some extent, show that there is a range of opinion on the committee. In terms of tools, I guess I do feel proud about the press conferences, which I introduce 4 times a year after the summary of economic projections, in which Chair Powell has taken to an art form. And I think also, just the inflation target, the forecasts that we release, and there's a cultural change, which some people don't like, but I think on net is good, which is, it used to be, if you look back at speeches in the Greenspan era, the president of the Federal Reserve Bank of Minneapolis, would talk about, harvests or something, wouldn't talk very much about the global or national economy. Now you have a lot of people talking about, the different aspects of the Federal Reserve's views. And again, that contributes to both market transparency and also to accountability to the local constituency and to the national constituency.
Jay, you of course have continued to push forward on the communications and transparency fronts. Welcome your thoughts.
I think the broader setting is that transparency is especially important today. Polling data show that many important public and private institutions globally have struggled to retain the public's trust and support in recent years. Now, we're an institution that serves a critical public mission, but to be here and work here is to know that the particulars of what we do and how we do it are not generally top of mind for most people. And on top of that, we have a critical and a rare grant of independence. And all of that to me means that we have a special obligation to explain ourselves clearly, what we do, why we do it, to provide transparency to the public and their elected representatives in Congress so that we can earn and deserve their trust and support. And that's a critical task if we are going to sustain our democratic legitimacy through this interesting period. My colleagues and I really take that as a primary and affirmative, proactive obligation and not something we see as a burden or of second order importance. So in that spirit, to your point, we have followed the example of Chairman Greenspan beginning in 1994 with the first post-meeting statement, through Ben's innovations and Janet as well, in looking to foster greater transparency and accountability. And a couple of examples, we now do a press conference after every meeting, not just every other one. We have greatly expanded our congressional outreach to be certain that we hear directly from lawmakers on an ongoing basis, so that they have the information that they need to conduct appropriate oversight. As I mentioned, in 2019 and 20, we conducted a public review of our monetary policy framework, seeking input from a broad range of people and groups all around the country. We've also significantly expanded transparency beyond monetary policy. For example, we now publish semi-annual financial stability and supervision and regulation reports. Of course, there are always communication challenges, especially I find about communicating the uncertainty that attends our assessments of economic conditions and the outlook. And the good example of this is, despite our persistent efforts to explain otherwise, the policy paths from the SEP seem regularly to be taken as a firm plan or a committee decision, rather than what they are, which is a compilation of individual participants' best assessments on a particular day of appropriate policy under the assumption that conditions evolve in line with their baseline forecasts. So that's just a challenge that we constantly face in the context of great uncertainty. Despite that, I would say, though, that the summary of economic projections has actually been very useful during this tightening cycle, as markets have looked ahead and priced in future rate hikes, long before they're actually implemented.
Your last point really brings up the idea of communications as being an effective policy tool. And I guess the key element of that is the use of forward guidance. Jay, in one school of thought, forward guidance is a tool that should really only be deployed when interest rates are at the effective lower bound. And so you can no longer provide accommodation by lowering rates further. And so you do so through communicating about the policy path in the future. But another school of thought, forward guidance should be just a regular part of communicating with the public to convey the committee's policy intentions, even far away from the effective lower bound. Where do you come out in that debate?
I do think it depends on circumstances. I do think that forward guidance can be useful when policymakers have a materially different or clearer view of the likely path of policy than does the interested public. I would agree at the effective lower bound when we need to provide more stimulus by indicating an intent to keep policy accommodative longer than the public expects. There's a use case there. I also would say, though, that communication comes with a cost of misinterpretation, and it also may limit flexibility. So I think we should use forward guidance sparingly when the course of policy is either reasonably well understood or, on the contrary, is so dependent on uncertain future developments that little really can be said constructively about the future. And a good example of that was the March 2020 FOMC meeting. The pandemic shutdowns were just beginning. The level of certainty was almost unimaginable, and we chose not to issue an SEP at that point. Really, our view was that releasing a forecast at that time might have been more of an obstacle to clear communication than a help. In contrast, as I mentioned a minute ago, forward guidance has really been a useful and effective tool during the current tightening cycle, as financial conditions have tightened well in advance of actual rate increases. You know, the 2-year tightened between the September 21 meeting and liftoff in March of 20. It tightened by 200 basis points before we ever actually lifted rates, and that's significantly because of our communication. So in the current context, until recently, it's been relatively clear that further policy firming would be warranted, and our forward guidance has said so. Now, however, we've come a long way in policy tightening, and the stance of policy is restrictive, and we face uncertainty about the lagged effects of our tightening so far, and about the extent of credit tightening from recent banking stresses. So today, our guidance is limited to identifying the factors we'll be monitoring as we assess the extent to which additional policy firming may be appropriate to return inflation to 2% over time. As I noted at the last press conference, that assessment will be an ongoing one as we move ahead, meeting by meeting. Having come this far, we can afford to look at the data and the evolving outlook and make careful assessments.
Thank you. Jay, you mentioned that guidance can be useful at times when the public may expect a very different policy path than policymakers. How do you think about those sorts of situations?
You're right. So recently, it has sometimes been the case that markets appear to be pricing in a different rate path than the committee expects will be appropriate. But I would say that disconnect does not seem to reflect a misunderstanding of our reaction function or a lack of belief that we'll do what's necessary to bring inflation down. Rather, it appears to reflect simply a different forecast, one in which inflation comes down much more quickly than the committee participants think is most likely, perhaps due to a significant downturn. I would say also, so far the data have continued to support the committee's view that bringing inflation down will take some time. Moreover, something we often don't remember to think about is that market prices always reflect both expectations and compensation for risk. And what market participants say in surveys of their expectations is actually closer to the views in the SEP than what is reflected in market pricing. So ultimately, my colleagues and I have our forecasts and market participants have theirs. Our role is not to advocate for our forecast. What we can do is be clear about our expectations for growth, unemployment, and inflation, and the likely implications for policy. As well, we want the public to understand how policy would react if the path of the economy were to differ materially from our expectations. And of course, we do lay out our individual forecasts quarterly.
Then what would your takeaways be for the past couple of decades' use of forward guidance as a policy tool?
Well, Charlie Evans and co-authors have made a useful distinction between what they call Odyssean and Delphic forward guidance. So Odyssean forward guidance is a commitment forward guidance, which is rarely used, but typically at the lower bound, where the central bank promises to do something and its credibility on the line that it will follow a certain path going forward, and that's a way of getting more stimulus. And I think, again, that goes back, again, to Alan Greenspan, I think, to indicate that a certain path was very likely, and that actually helps achieve the objectives. Delphic forward guidance is basically just a forecast. Here's what we think. Tomorrow we might think something different, but we're just trying to, as part of our transparency, we're just trying to give you a sense of where the economy is going and how we think policy will react. Now, as Jay points out, there are some problems in practice. One is people don't understand the difference all the time between a commitment and a forecast. That's something that Jay has emphasized, and I think should be emphasized. Another is people underestimate the amount of uncertainty involved, which is enormous. So I don't think you can do without some form of forward guidance, because the idea of transparency says, here's what we see. And here's why we're thinking. And so the idea that there's no guidance at all, most of the time, I take March 2020 as a counterexample, but most of the time you do want to give at least a sense of where you think the economy and accordingly policy are heading. I think, just if I might editorialize one more minute, I think one of the issues is that the FOMC is so large and geographically dispersed that it's been difficult to come up with a collective committee forecast. We tried to do that when I was chair. The dot plot is a compromise, which is not ideal. Other central banks do other things. Sometimes they have collective committee forecasts that are voted on, or they use market rates, or they publish the staff forecast. So there are different ways to go about this. But again, I think that forward guidance is both an instrumental tool, but again, letting people know sort of how the central bank sees the evolving situation, even if there's lots of uncertainty, which you can say normally is part of transparency.
So you highlighted uncertainty as being a key factor in dealing with some of these issues. Obviously, uncertainty is a pervasive feature of monetary policy making, and often invokes, the so-called risk management approach to making monetary policy. Maybe we can start, Jay, with you on this topic. The FOMC's raised the federal funds rate by 5 percentage points in a little more than a year. That's a very rapid pace by historical standards, as we all know. How do you view those actions in the context of the uncertainties that you and the committee faced about the economic outlook, and how did risk management considerations factor into your decisions?
So I'll start by remembering that Alan Greenspan famously said that pervasive uncertainty was the defining characteristic of the policy landscape. It's worth remembering that he made that comment during what we now think of as the Great Moderation. So that statement has never been more apt than it is today. If you look back, the pandemic, the global shutdown, the historically forceful response and the reopening, all of that had no modern precedent. So it has been a time of historically elevated uncertainty and of unexpected outcomes. No advanced economy had ever faced a shutdown and a reopening, and now all of them would face it at the same time. So no matter what happened, the outcome was going to be unprecedented. So this level of uncertainty posed real challenges for policy and policy communications. On the one hand, we had to be nimble to be able to respond to the evolving situation. On the other hand, we wanted to be as clear as possible about what we were doing, lest we add to uncertainty. So I would say policy certainly has been nimble, consistent with what was within our expectations. The data did actually show declining inflation through September of 2021, but then turned decisively against that expectations thereafter. And in response, we accelerated our policy firming, ultimately, as you noted, raising rates by 500 basis points in just over a year. Over this period, we communicated that the object was to reach a stance of policy that is sufficiently restrictive to return inflation to 2% over time. But we also communicated that the level of rates that would ultimately be required was highly uncertain. Now, until very recently, it's been clear that further policy firming would be required. As policy has become more restricted, the risks of doing too much versus doing too little are becoming more balanced, and our policy has adjusted to reflect that fact. So we haven't made any decisions about the extent to which additional policy firming will be appropriate, but given how far we've come, as I noted, we can afford to look at the data and the evolving outlook and make careful assessments.
Ben, when you became a policymaker, you were well versed in sort of the academic literature on decision making.
Yeah, I moved from that side to this side.
Yeah. How does it work in practice?
I say uncertainty when you're an academic is trying to decide whether your error term is Gaussian or not. In actual policy making, you don't even know what the current quarter GDP is, because it's going to get revised, several times down the road. I remember when I was sitting just as a member of the board, and Greenspan was in the chair, and we had responded to some inflation data, and a little bit later, it turned out that inflation change had been revised away. And I asked the chair, do you think we can revise our interest rate policy? It is very difficult. I mean, got to laugh with that, but just trying to make policy, it involves not just uncertainty about, the data, about the model, about all the things that can happen, about the social and economic and political environment. So it's very difficult. And unfortunately, or fortunately, given that monetary policy works with a lag, given that there are risks on both sides of the modal forecast, there's not much choice but just to accept that uncertainty and try and do the best you can, being ready to adjust as new information arrives.
Very good, thank you. We are getting close to the end of our allotted time. Maybe we could wrap up with just a question looking ahead. Jay, maybe we can start with you. What would you point to as some of the key issues that will be most relevant to the research community as well as to the policymaking community?
So I guess I would start with the labor market, and what we talked about earlier of vacancies in particular, and the beverage curve, and the whole discussion over whether the extraordinarily high level of surplus demand in the labor market can be lessened through the vacancies channel without a significant increase in unemployment. That would be more akin to what has happened in all prior cycles, or most prior cycles. So that's going to be a question that we will resolve empirically. But I think we're learning new things about the workings of the labor market, at least in this one situation. I think on monetary policy, it's going to be interesting to look back and try to understand how inflation spread from what was very, at the beginning, very focused on the goods sector due to the rotation of demand from services to goods, and the tremendous amount of support that goods purchases got from fiscal and monetary stimulus. How did it spread then through really into the service sector, where it now significantly resides? I think we're seeing much progress on goods, and we have progress in the pipeline on housing services, but where we see persistent inflation is now in the service sector. So what is the mechanism by which that happens, and what are the implications?
Ben, you have the last word.
Well, I think one of the things that I would urge researchers to look at is the relationship between monetary policy and financial stability. Very, very difficult relationship. If you read the papers, you see that everybody has a very strong opinion about this subject, but they don't necessarily correlate. As Mark Twain once said, the things you don't know can hurt you as much as the things that you know for sure, but ain't so. I think that we really do not understand, to the extent that we need to, the relationship between different aspects of monetary policy, risk-taking, balance sheet behavior, et cetera. It's just something, there's a lot of good work being done, don't get me wrong, but I think we need to understand much better what the channels are, and to quantify the relationships so that we can think about to what extent we need to take that into account in monetary policy.
Very good. Well, let me thank both of you tremendously for sharing your perspectives with us today. It's been a highlight of our conference honoring Thomas Lobach. And so thank you very much. Round of applause.
Okay, guys, so that is it for this today. So you can see the market initially reacted pretty negatively. It's been on a big tear back. What I will say is, everybody stop being so emotional. Nobody knows what the market's going to do. I see bears trying to laugh at bulls like we're still over yesterday's high right now. Like, everybody dramatizes the market and makes it dramatic and sensationalizes the market, I meant to say. But yeah, guys, just listen. You might be bearish, you might be bullish. Smart traders are somewhere in between. All right. Anyways, regardless of that, if you haven't already, we're going to do a crypto show. As soon as we end this stream, it's going to immediately bring you to our crypto channel. And we're going to do a crypto show. If for whatever reason it doesn't, you can go to this link here or go to youtube.com/beginner trading or beginner crypto. So if for whatever reason it doesn't bring you there, you can go to this link. Also, guys, if you haven't already, if you want to day trade this momentum, what you see on the chart right now is the S&P 500 futures contract. You can day trade futures with no PDT restrictions. You can day trade them short with no PDT restrictions. And the cheapest way to get your feet wet in futures without taking on a lot of risk is a funded account program. Top Step is the most legit futures funded program in the world. They pay out millions, fund thousands of traders a year. There's no PDT in futures, and it's really what most of the pro traders do, is they trade futures because you can trade currencies for my Forex traders. You can trade the S&P 500 for my stock market traders, and you can do so without the PDT restriction. Top Step, what they do is they give you a demo, and if you can hit the target on their demo while following their rules and pass their testing, they fund you between 50K up to 150K with a 90% split. And again, there's no PDT rule here. You can day trade short. Just taking the challenge builds your skill. And they are a sponsor of mine, so I'm certainly biased in their favor because they pay me money, of course. But it genuinely builds your skill, and it's the best of both worlds, where if you pass it, you still keep 90% of your profit. If you fail,
you probably would have lost money using a real account anyway, because most new traders lose. And so it's the best of both worlds. Test your skill, build your skill, taking some of these challenges. Here's the link. Great way to help support the channel. Market's starting to bounce back up again. And as soon as we end this channel, guys, again, it's going to immediately bring you to our crypto stream. We are doing a crypto stream today. Thank you guys so much. We actually broke stream records today. We had more viewers today than we have ever had on any live stream. We had over 8,000 viewers at one point in time for this stream. So thank you guys so much. Channel has been growing crazy fast. Today we've grown by like 1,000 subscribers. And so again, thank you guys so much. We cover all the major stuff: economic data, CPI, PPI, jobless claims, Jerome Powell rate hike decisions, Fed press conferences, all the big earnings reports and earnings calls. We cover all of it for free. Don't sell a course. Don't charge for content. Hit the subscribe button. You guys know you want to. All right, guys, we're getting ready to do our crypto show again. As soon as we end this stream, it's going to bring you to our crypto channel. And yeah, thank you guys so much, guys. I appreciate the love and support. Again, hit that sub button. Again, if you want to talk crypto, we're about to talk crypto right now, how this affected crypto, how this affected Bitcoin, all that stuff. And yeah, as soon as we end our stream now, it's going to bring you to the crypto channel. Again, if it doesn't, for whatever reason, again, you can check out Top Step. Let me make sure I posted that link. I'm pretty sure I did. Yeah. Again, if you want to check that out, you can. Also, if you want to check out the crypto channel that we're about to do, again, I'm going to put the link up just in case. For mobile, sometimes it gets a little weird, but here is the link right here if you want to join the crypto channel right now. But yeah, guys, I'll see you guys over there.